but crude oil is starting to drift to the downside. I've got crude oil futures right now 86.38, down about 0.5%. Now, that's giving support to a market that was already higher to start the day. It's almost like the stock market opens up about 3 or 4 tenths, looks back and say, we okay here? Everybody good? And crude oil is giving them a little bit of support in that. So as everything keeps evolving, I think the overall temperature seems to coming down, and stocks seem to like it so far.
Yeah, and whatever is happening, Bitcoin seems to like something. Obviously, we've topped that 75,000 level as well for the first time since May. It's had a pretty good run. A lot of talk about this short squeeze happening in the crypto space right now, particularly because we didn't have any clarity on the Clarity Act. And then President Trump came out and made some comments this week, not to mention also we have had the dollar backing off. That's been good for gold. Just walk us through your thoughts on the performance we've seen in Bitcoin this week.
Well, number one, when you look at Bitcoin or cryptocurrency, there's hard to establish a real fundamental theory on it. But what you can say is momentum. And right now, momentum with the summit that was had at the White House this week with Bitcoin big hitters, and then President Trump come out and talking about the passage of the Clarity Act has momentum back on Bitcoin side. Is there short covering there? Possibly. We don't have any evidence, but certainly part of that is shorts covering. But right now, momentum is on the side of the bulls when it comes to cryptocurrency. Now, crossing over to metals, all you have to do, Sam, is look at the 5-day or 10-day chart of the U.S. dollar, and you can see why the momentum or the tailwinds are behind metals jumping on this news. That softer dollar, the good week it's had going lower, is really fueling a rally in metals, Sam.
Yeah, no doubt the metals like what we've seen in the dollar this week as that's come off substantially, and gold had a very good day. That, session we have had the yields backing off quite substantially. But also with respect to the flash PMIs, one could argue that manufacturing activity has looked pretty resilient in the face of this war globally. I mean, not just here in the US where we've had, strong Philly Fed, strong Empire, strong ISM, but, in places like the Eurozone, I mean, Germany's looking resilient, Japan's firing up with all those exports of semiconductor equipment, AI-related products as well. I mean, you need all the metals you can get, I suppose, with that. Do you want to leave us with a final thought on this market before we let you go for this Friday, Kevin?
I think the overall tension that has been nagging this market seems to be de-escalating right now. A positive crude oil, or by positive I mean on the downside, a positive reaction to crude oil to end the week will be very positive for stocks that pretty much like what's happening with the economy, like what's happening with corporate earnings, like the economic data, and just need the nagging problem of crude oil to dissipate a bit, Sam.
Yeah, absolutely. And going into a very consequential week with a lot of event risk on the horizon, as I mentioned, with NVIDIA, PCE, and Jackson Hole. We'll be watching. Kevin, really appreciate it. Thanks so much. Coming up, we'll discuss the health of the U.S. economy and what this week's Treasury buyback announcement could indicate about the bond market. Morning Trade Live back after this.
New York Stock Exchange, live interviews, market movers, and real-time coverage right from the floor. Subscribe now at schwabnetwork.com.
You could bet on this and win. You could bet on this and lose. This and lose. This and win. This and lose. This and lose. This, lose, win. Lose and lose, win. Even this, lose. Betting isn't investing. Investing is owning. It often rewards patience and discipline over shots in the dark. The long run belongs to those who invest in it. Own your future. Don't bet on it.
No politics, no spin, just the market from open to close and beyond. Streaming 24/7, any screen, anywhere at schwabnetwork.com.
We are back here on Morning Trade Live. BJ's Wholesale Club gaining ground this morning after beating top and bottom line expectations for the second quarter. The Warehouse Club saw comp sales rise nearly 12%, driven by gasoline sales. Comp sales ex-gas rose by just over 3%. BJ's Wholesale saw membership fee income rise by nearly 10% and raised its full-year adjusted EPS forecasts as well. So a lot to like in that report, and you can see it reflected in the shares today. Getting rewarded up 3.5% right now, trading at $94 and change. Let's take a look at some of the leaders. Moderna's back up there. Triple-digit gains, pulled back yesterday. We're up again as well again today, up 14%. Coinbase continuing to rally here as Bitcoin prices are ripping, up 10% as well. Freeport-McMoRan up 6.5%. Obviously, we've been talking about the commodity space, obviously, with the dollar pulling back here as well. Albemarle in the business of lithium up almost 5 right now. So let's just take a look at some of the laggards on the session. Teradyne down 3.5%. That's been on this board quite a number of times this week, so maybe a bit of a tough week there for that particular name. Marvell's down 3%. We've had some analyst calls out on that name this morning. AppLovin down 2%. GoDaddy down 1.5% as we stand. So not sort of double-digit declines here, but a couple of tech names on the radar for us today as far as the biggest underperformers on the S&P 500 this morning. All right, let's move on, talk more about the macro and the week that was in these markets. Joining us now is Francis Stacey, CIO of Tuttle Wealth Partners. Happy Friday, Francis. You can probably hear it in my voice. This was meant to be the quiet week, right? What did you make of what Treasury did this week?
Yeah, it's just, it has been done before. I think the last time it was done was in the 60s, but this is the whole dynamic around the Fed and the new role of the Fed under Warsh, under the task forces, under the, lack of forward guidance and him saying that the market should just price things in. The Treasury felt that they had to intervene. The bond vigilantes came out. That is the Achilles heel for the administration. When we had that, of course, I'm not political, but when we had that acronym TACO, Trump always chickens out, and then we had the WACO, and then we have all these acronyms. It really is when the bond vigilantes come out and they, instead of the old adage, don't fight the Fed, they are fighting the Fed. And that's what the Treasury Secretary is reacting to.
Yeah, I mean, Dr. Ed Yardeni was out this week saying the bond vigilantes, which is obviously the term that he coined back in the 80s, was stirring once again. And then subsequently, obviously, we've had this move by Bessent and Co. But, he's made the argument as well, that's Yardeni, that he's not trying to lower bond yields right now, Bessent. Rather, he's trying to stabilize them so the Treasury auctions go smoothly. I mean, he's still in the camp that they expect the 10-year to be in the range of 4 to 5%. And he says that's healthy given the economic data that we've been seeing. Would you agree with that? I mean, particularly manufacturing, which seems to be a bright spot.
Well, the reason that the economic data has remained strong is because we have a record amount of liquidity into the system. And what happened over COVID was fiscal spend sort of took over the Fed balance sheet with regards to creating quote unquote liquidity. Instead of quantitative easing on the Fed balance sheet, you had that fiscal spending. Then people like Ray Dalio came out and said, if you don't get this deficit down to 3.5% of GDP, you're going to have a real problem fiscally. You had the DOGE effort early in this administration. The DOGE effort, while well-intended, I'm sure, didn't really consider the plumbing. You cut all that government spending. You're actually cutting those liquidity flows that became prominent over COVID off. So the economy is attributed to the large amount of liquidity in the system. With regard to Yardeni's comments, it just depends on where you are in our quote unquote K-shaped economy. I don't agree with Bessent that it's over. You have over 60% of Americans living paycheck to paycheck. You have 44% of Americans who can't raise $200 of cash in an emergency. So what happens when you think about how quote unquote healthy these higher treasury yields are, and the 10-year, which so much of our credit cards and mortgages and things like that are priced off of that 10-year, does it cause a problem for that lower 60% that leads to a systemic credit problem? And that becomes the question, because the upper 40% is unaffected by the lower 60% until the lower 60% has systemic defaults, which then force a repricing in the assets of the upper 40%.
So where does this leave the administration over the next several months or so as we approach the midterms as far as, confronting affordability? I mean, what sort of steps do you anticipate we're likely to see? Because it was just this morning at the crack of dawn, we heard President Trump talking about the tariffs on beef being adjusted now to sort of ease prices as far as, cattle inflation is concerned. So what are your expectations? What's your outlook for the next few months here?
Well, they're going to try to do everything that they can to support the narrative that the economy is doing well for all coming into the midterms, because, the thing that we have to confront is this K-shaped thing. Now, I'm sure Scott Bessent would say it differently given another chance, and any of us on TV sometimes say things and we would change it later. But to say that the K-shaped economy is over and now it's a C-shaped economy, I don't know. I think that's a little premature, because I don't think it's actually... I think it's a structural issue in the liquidity flows, in the bond market, in the credit cycle, where the wealth gap gets continually widened through these iterations of the credit cycle. I don't think it's a statistical issue. And I think that that's what Trump has been trying to do by renegotiating GDP through these trade arrangements. However, obviously, he's been balked a lot, and the bond vigilantes come out and say no bueno. So he's in the middle of that. I think it's great to make anything more affordable for Americans who are having a tough time keeping up with the cost of living and don't have assets that are appreciating. And I think it's just going to be that dance. Now, Trump has made he hasn't been shy about wanting to lower interest rates. And the reason is that, all of the $1 trillion a month in T-bills that they have to continually refinance. And as rates go up, that's costing the federal government more and more and more, which is adding to the debt, adding to the deficit, adding to the debt service, all becoming very onerous on the system. And so that's what's happening. And so that's where Bessent is sort of intervening as Warsh kind of finds his way through this kind of new environment.
Yeah, well, it was interesting listening to Bessent yesterday giving his first TV interview since that move by Treasury about how, this is a thinly traded market. He highlighted the level of, IG corporate bond issuance as well. No doubt that's been giving Treasuries a bit of a run for their money lately. But he also alluded to the fact that the U.S. can grow its way out of the $40 trillion worth of debt. So where does that leave Mr. Warsh, do you think, come next week? What are the markets, do you think, going to be looking out for if this is an attempt for yield curve control on the long end? What can he do on the short end?
Well, it's going to be interesting to see what Warsh says at Jackson Hole, because he's sort of left things to the task force findings. And let's see how far those task forces have gotten in their findings that is going to sort of shape how he runs things. I think he's bravely taking, on the challenge of, changing the role with the Fed, because again, we used to have the dog wagging its tail with the Fed, don't fight the Fed. And now we have the tail wagging the dog with the bond vigilantes. With regard to Bessent, yes, we could potentially grow our way out of this. The headwind that he has from a structural basis is the thing that Ray Dalio has been harping on, which is the more debt service you have, the more demand you need in the bond market. And then the more of that issuance gets sucked up into debt service, which means it doesn't participate in something called the velocity of money, or it doesn't participate in circulating through the economy and adding growth. So to the extent that we have more liquidity coming into the system, but a lower percentage of that liquidity is actually participating in growth, that is a headwind to, his claim. And obviously, of course, I wish all Americans and the administration the best of luck in solving this problem.
Yeah, and then there's obviously the other added element of all this AI capex. I was having a great conversation with Lizanne Saunders about that yesterday. It seems to be a sort of two-way street here where this is obviously a big contributor to growth, but obviously we're having to import a lot at the same time in order to support that AI infrastructure build out that we're seeing here. And we saw those import prices picking up. It was looking a little hot, you could say, at the core earlier this week as well. What else are you watching, Francis? Because, yeah, as I mentioned, we've got the AI story, which obviously Warsh and Besson are looking at very closely. We'll hear from NVIDIA next. What are you keeping tabs on the most now that you've obviously got another company tapping the debt market? That's just added to the issue here in bonds for treasuries as well. Now you've got Jensen tapping Wall Street to write the checks as well.
Yeah. So the whole key component of, the fact that, yes, CapEx has participated, and the figure that I've heard is 90% of GDP over the last 3 quarters. But the whole thing that you've mentioned is that CapEx is turning from free cash flow on these company balance sheets over to the debt issuance. And that probably is going to have a lagging effect in how it's reflected in earnings in the next 2 to 3 quarters. But it'll be interesting to see how that starts to reprice some of these balance sheets and the earnings prospect, because the market is counting on continued AI capex, and the market is counting on, a continued justification for these multiples. So anything that threatens these multiples is going to have a repricing. And so that's kind of what I'm watching is as this sort of capex spend, kind of turns into a debt market.
Yeah, that's something we've been watching very closely. Francis, really appreciate it. Thank you so much for your time today. Have a wonderful weekend. Francis Stacey there, CIO of Tuttle Wealth Partners. Coming up, we'll take a closer look at the big picture with a team from Charles Schwab. Morning Trade Live. We'll be right back.
On the floor of the New York Stock Exchange. When markets react, we are live with analysis that matters. Watch now, only on SchwabNetwork.com.
How's it going?
First day, so.
Sometimes,
Next. Try it again.
you could have done better.
Please.
Same goes for where you invest. Level up and invest smarter with Schwab.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Schwab Network has you covered when the biggest name in AI reports its earnings. Join us Wednesday, August 26th for NVIDIA's second quarter report.
Market on Close will give you 30 minutes of extended coverage to react live to the numbers that matter. You'll get instant feedback from the report, where the stock is headed, and what comes next in the AI trade, because where NVIDIA goes, so could the market.
Tune into Market on Close for NVIDIA's earnings on Schwab Network.
The final 90 minutes of the trading day, that's when markets make headlines and traders make decisions.
From earnings shocks to sector rotations, we're tracking the catalysts that move markets right into the close.
Here on the floor, I bring you real-time sentiment from traders driving the action.
And in Chicago, we break down the data, technicals, and trades you need to see before the bell rings.
Live coverage of the close every single day.
This is
Market on Close, live weekdays 3 p.m. Eastern, only on Schwab Network.
We're back on Morning Trade Live. Fed downgrading Teradyne to neutral from outperform, finding valuation. The firm maintained its $420 price target, saying the test systems company remains well positioned over the medium and longer term, but faces a lack of near-term catalysts amid questions over the sustainability of AI capex investment growth. Fed also sees compute as unlikely to drive material upside in the second half of 2026, given the Timing of the next program ramps at Terra 9's key hyperscaler customers. So it is trading down at 4.5% right now, $366 and change. Welcome back to Morning Trade Live. It's time now for the big picture. Let's welcome in the team from Charles Schwab this morning. Cooper Howard, Director of Fixed Income Research and Strategy, Schwab Center for Financial Research. Coop, good morning. Happy Friday. Let's talk about the Bessent Treasury plan here. Obviously, it seemed to be somewhat of a band-aid, I guess, on bonds this week. Liz Ann was sort of suggesting that, this is attacking the symptom rather than the cause. How have you folks been thinking about that this week?
Yeah, well, thanks for having me on this morning, Sam. I would agree that it's a relative band-aid in terms of what actually is happening on the long end of the Treasury market. Usually we don't tend to pay too much attention, I should say, or it doesn't take the number one spot of attention in terms of the fixed income market, but definitely the 30-year Treasury is taking a lot of attention. And I think, yeah, the Treasury did announce plans to increase buybacks from $2 billion up to potentially doubling that amount. I think in terms of the overall size of the long end, though, it is a relatively smaller piece of it. So I think the messaging is really what's important here. And what it's signaling to us, Sam, is that a lot of investors or the Treasury itself is getting concerned as far as the level of interest rates on the long end, as well as the move higher. So we can look at it in two different ways. And if you look at the level, yes, we're at the level that we haven't seen until 2007, going back all the way to 2007. That's relatively concerning, but also the speed of the move higher. I think that's also what the Treasury is reacting to, and at least in the way we're viewing it, is showing a little bit of signs of concern there.
Yeah, that's interesting. I know that Kevin Gordon has been touching on that this week as well about the rate of change, but he was sort of suggesting it's been more of a creep higher in the US Treasury market compared to other parts of the world where we have had, quite an aggressive move to the upside here. What is the signaling then beyond where they perhaps believe is the line in the sand there in the 30-year? I mean, particularly when it comes to the dollar, because there's been a lot of talk this week also about the fact that this could benefit exports too.
Yeah, so I think that's also a very good point that you brought up, is that it has been a relative global phenomenon. So it's not just the Treasury itself. A lot of attention has been paid towards the U.S. markets, and yes, it is something that we're obviously closely watching, but it's also a global phenomenon that we're starting to see the move higher in yields. So I do think that this is something that's relatively interesting to watch. And in terms of what it means, Sam, for our investors, what we've been suggesting is just a little bit of caution on the long end. If you've had or listened to my colleague Colin Martin or I over the past couple of weeks, we have been suggesting a little bit more caution on longer dated bonds and suggesting a below benchmark duration. So we do think that for many of our Schwab investors, moving out further on the yield curve wasn't too attractive a few weeks ago. We still don't think it's relatively attractive right now because there is potential for higher longer-term yields going forward.
What's your sort of expected range here? Because as I mentioned, Yardeni is looking at quite a wide range of between 4 and 5%. I mean, he says that's healthy because of the strength of the economy, and he calls this the roaring 20s. But what sort of range are you looking at as to why you're sort of suggesting to go slightly below benchmark?
Yeah, so in terms of a range that we're looking at right now, for the 10-year, we do think that it's going to trade in a range of about 4.25 to 4.75. Obviously, we're close to that upper side of it. But I also think what's important is not necessarily that range, but the potential direction of where we might move next. And in terms of our view, we think that there's probably a limited downside on how much lower or how low the 10-year Treasury can go. And the way we like to really break it down is Fed funds expectations, inflation expectations, and then the term premium. And a lot of the attention this week has been paid to that term premium, and it has been moving up. And part of the reason is the federal deficit, the fiscal situation that we're currently in. So I think that that term premium is going to stay relatively elevated going forward, and that'll probably put a little bit of a floor on how much lower the yields can go, Sam.
So what are you expecting from Kevin Walsh at Jackson Hole then next week?
I think that that's going to be the big question. I think what we'll see, probably pointing more towards the task force, I think what he's looking to do is ultimately kind of change the narrative of how the Fed operates or how the Fed has been looking at a lot of different things. So I think that that's going to be something that we're going to be closely watching next week. Do we get more information about ultimately what those task forces have been deciding or what they're leaning towards potentially changing? We do know that obviously he's very focused on the inflation mandate, so I would not be too surprised if we hear more about price stability and getting that back under the 2% target. I don't expect them to kind of throw the 2% target mandate out the window. We think they'll probably keep that intact, but I would be more interested to see, does he lean into a little bit more of what the task forces are potentially finding.
Yeah, absolutely. Cooper, thank you so much for your time. Have a wonderful weekend. Really appreciate it. Cooper Howard, Director of Fixed Income Research and Strategy, Schwab Center for Financial Research. Coming up, it's time for the morning trade. We'll take a closer look at Broadcom after reports it's looking to raise debt for an AI chip financing deal. Morning Trade Line. We'll be right back.
Moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals. You can spend less time searching and more time.
Have you ever watched an interview and thought, I wish they had 5 more minutes, or I want to know how they discovered that hidden gem? That's exactly where Market Matters comes in. I'm Marley Caden, and our podcast is slowing things down. We're going beyond the earnings to get to the heart of the people and companies driving the global economy. If you want the full story, not just the headlines, Market Matters is for you. Subscribe wherever you get your podcasts.
While others recap the news, I help you read between the lines from what's moving markets to what's next with sharp takes and market know-how. Follow me on all social media platforms at Diane King Hall and connect with me on LinkedIn for more.
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Schwab Network delivers real-time market insights, live from the NYSE, NASDAQ, the CBOE, and beyond. From earnings to economic data, we cover what matters as it happens. Streaming 24/7, anytime, anywhere, free on schwabnetwork.com.
We're back on Morning Trade Line. Let's focus on Broadcom as the chip maker looks to raise more than $60 billion in debt for an AI chip deal, according to a Bloomberg report. The news comes as chip makers are becoming more creative with ways they are raising money for the AI build-out, including a $500 billion financing plan announced by NVIDIA earlier this month. Is the price action for the major players in the sector? We do have Broadcom trading higher, over 1% right now off the back of this news. That is the same story for TSMC, which is almost up 1% right now. NVIDIA, though, lower. AMD on the back foot as well. So a mixed picture across our chips, semiconductor players this morning. Following this news, that is the focus of the morning trade. So joining us for a closer look is Marley Caden, host of Trading 360 and Market on Close, alongside myself. Marley, happy Friday to you. Let's just talk about this financing deal, because obviously a report at this stage, nothing that seems to have been confirmed, but it's not the first time we've heard of a tech company tapping the debt market. But how significant is this move?
No, I mean, it's just another potential deal in the latest flurry of moves that we've seen to fund this AI infrastructure build-out. But again, as you mentioned, it's just reports right now. Bloomberg, the initial reporter of this, that Broadcom is in talks with a group of lenders that aims to raise more than $60 billion in debt here, in a financing deal that will reportedly benefit Anthropic and other companies. The financing is reportedly still being finalized. It may also include a roughly
$30 billion junior debt tranche. So under this proposed plan, Broadcom would allegedly guarantee a portion of the senior secured tranche, which could range from about $60 to $70 billion. Cumulatively, that would bring the total to as much as $100 billion for this particular deal. Blackstone and Apollo are reportedly in talks with Broadcom to participate in this chip financing, following a partnership that the three companies struck back in June to help finance computing infrastructure. So it wouldn't be the first time that they'd interacted in this way. The debt would also reportedly be issued by a special purpose vehicle, some of the people involved said in this reporting. The talks are ongoing. Of course, details can change here, and these are unconfirmed details at this point. The financing could also be rolled out incrementally rather than all at once, was another key point here. Spokespeople for both Broadcom and Anthropic have not commented, though they've declined to comment here, as did representatives for Apollo and for Blackstone. But Anthropic has been taking a bigger role in this build-out. They're aiming to ensure that they have enough computing capacity. Broadcom, on the other hand, is looking to sell more chips and other equipment to try to rival NVIDIA's dominance in the market. Now, this potential deal could help Anthropic access chips and other key AI infrastructure features, could also be similar to this $35 billion debt agreement that they kicked off the group's AI XPV partnership. That first deal, of course, Broadcom backstopped most of that debt, and investors, which include Apollo and Blackstone for that, financed the purchase of the custom AI chips, which were then leased to Anthropic. That enabled the senior debt tranches to win investment-grade ratings at lower borrowing costs. So we could see a similar structure here. But again, this is just reporting right now, but would not be unlikely to see this one come to fruition, as we've already seen similar deals like this, Sam.
Yeah, absolutely. And you hit the nail on the head. I mean, there's just so many threads that merit pulling on with this about how AI is being financed right now, whether it's going to be a rival to NVIDIA and also just bringing up more credit concerns in these markets. Marley, really appreciate the details of that report. Thank you so much. Catch you later. Let's trade it now with Dan Deming, Managing Partner of KKM Financial. Dan, happy Friday to you. I'm just looking at the chart for Broadcom, versus what we've seen for the likes of NVIDIA. It's had a bit of a tough old month, down about 4% or so. It's still up on the year, about 6.5% or so. Just talk us through an example trade on this name.
Yeah, Sam, happy Friday. This is an interesting dynamic that's unfolding in Broadcom as we are near the low end of that range. And as you pointed out, looking at the price action over the summer, it really has been some fits and starts. But here we are, even with today's news and initial pop, it's basically being sold, and we're holding on just to a slight gain here. So to me, looking at the price action over the next month or two, risk definition, I think, is the key metric when I look at an example trade here, because I do see the potential for a break below 360. If we do, then it's, in theory, shifts the momentum to the downside, at least temporarily. So today's trade example is just buying a call spread in September, looking 1 month out from today's expiration, and again, defining risk. And so the 370, 420 call spread, you can do that here down a little bit from where I originally priced it, right around $15. So you have to put some cash out, but at least it defines what your cash outlay is going into the trade, so you understand the risk definition, and it allows you to capture a move higher. If we are able to hold this level and move back towards that top end of the range, which is about 430, that this allows to capture that to the upside.
All right, a good look at Broadcom today, trading high by 1.3. Dan, appreciate it. Thank you. Dan Deming, Managing Partner at KKM Financial. Coming up, we'll take a closer look at the sectors on the move this morning and the international headlines impacting global markets. Morning Trade Live will be right back.
To find out what's shaping early market action, Tech Check, Options Corner, Futures Focus, Technical Analysis, Morning Movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
Stay connected to what moves the markets. Download the Schwab Network app and stream anytime wherever you are. Live from Chicago, this is Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Welcome back to Morning Trade Live. I'm Sam Bardas, coming to you live from the New York Stock Exchange. It's time now to take a look at the sectors that are moving markets this morning. We're joined by Alex Coffey over in Chicago. Happy Friday, Alex. Just some overall takeaways. I mean, obviously, the S&P 500 stabilizing today, but it looks like we're still in for a losing week here, snapping 3 weeks of gains. Walk us through your thoughts.
Yeah, that game of ping pong that we constantly kind of look at with the leadership within the market over the last quarter continues. So today is a day led by sort of the things outside of the AI trade. You have 2/3 of the S&P 500 components higher on the session. You have a vast majority of the sectors higher, with only tech, utilities, and real estate under pressure. Real estate and utilities make sense given the move that we're seeing in yields, and of course technology tied to more of this AI infrastructure build out. Materials, healthcare, and financials, the leading sector, and I think that's something that should be noted, because when you see the NASDAQ lower, when you see some of these popular retail stocks lower, it can feel worse than it is, when reality is, under the surface, there's a lot of stuff working today, Sam.
Yeah, under the surface, I mean, we've been watching that churn for a number of months. I mean, looking at the average member drawdown of, some of the indexes. But, I mean, it has been characterized by a degree of rotation. I mean, healthcare's had a pretty good run of late. But you point out that you're looking at the financials, which has also had a pretty nice run too, no doubt benefiting from a number of tailwinds. I mean, all this AI CapEx. I mean, the money's got to come from somewhere, and obviously then the steepening yield curve too. They've enjoyed that. Just walk us through why you're looking at this particular sector.
Yeah, some of those reasons certainly stand out, but Sam, it also just highlights that depending on where you're looking in the market, the story is very different. If you look at a heat map of the financial sector, there's a lot of green on the screen today, and it's pretty broad-based into all sorts of different types of markets, whether it's financial services companies, whether it's banks, whether it's the capital markets names or insurance or consumer finance. Across the board, there's a widespread rally today. So to me, that was the standout. I know we have that up on the screen there, but a lot of the factors are the things that you said, Sam. It's the steepening yield curve. It's also the fact that you have an economy that's sort of in this inflationary growth cycle, and that's generally a positive cyclical part of the cycle, and that's good for these banks as well.
Yeah, the data's hanging in there, that's for sure. Alex, really appreciate it. Thank you so much, as always, for that breakdown. Let's turn to some international stories now. Shares in Samsung rallied in South Korea after the company announced a shareholder return plan of up to nearly $80 billion this year. It also announced it would pay roughly 30 trillion won in cash dividends this quarter. It came after a similar move by local rival SK Hynix earlier this week, as the tech giants share their massive AI windfalls. EWWY currently trading higher right now. Turning to the macro, as I mentioned, we got a bunch of global flash PMIs today. Japan's manufacturing sector saw new orders rise at the fastest pace since 2018. So producers reported the biggest increase in sales and overseas demand in more than 8 years, thanks to strong appetite for chips and AI-related products. While over in the Eurozone, business activity grew at its fastest pace this year, also thanks to robust new orders in manufacturing and exports. New orders expanded at the quickest rates in over 3 years, while outbound shipments rose for the first time since 2022. Activity in German manufacturing continues to hold up, offsetting softer Activity in France, while services activity in the UK remains resilient. Overall, input costs eased in the Eurozone and Japan, helping soothe some of the inflation concerns, although, like here in the US, prices still remain elevated. Coming up, it's time for Inside Out. We'll get a closer look at the discount retail space after this week's earnings from TJX and Ross Stores, and bring you an example trade when Morning Trade Live returns.
You know the market moves, and Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k'ing, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's markets.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for this stock.
That could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
My parents didn't really talk about money at all. In college, everybody around me had money. I didn't want anybody to find out that I wasn't middle class. I was using credit cards to do anything and everything. I ended up with $20,000 in credit card debt. That's when I kind of realized, like, all right, I have a money problem. This is about how my finances got wrecked and how I fixed it. And if I could do that, you can do it too.
Real-time access, data-driven analysis from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
We are back here on Morning Trade Live. The discount retail space has been in focus this week after earnings from TJX and Ross Stores. Both retailers posting comp stores growth for the quarter, with Ross the big winner, seeing comps rise by 10%, with TJX reporting comp growth of 4%. So let's check in on the discount retail space right now as to where shares are trading for this Friday. TJX cooling off a bit right now, but the rest holding up. Ross Stores, this is the initial reaction off the back of the earnings we got last night. It was good. We're up 3.5 right now. Dollar Tree's up 1, so is Dollar General. So let's go inside out on discount retail. Joining us now is Charlie O'Shea from O'Shea Advisors. Charlie, happy Friday to you. Momentum off the back of a strong Q1. It looks like they got it with some double-digit increases here as far as growth is concerned. I mean, this was going to be telling as to whether last quarter was a one-off, but it looks like it's sustainable. What's that telling you?
It's telling me the consumer is still looking for value. I mean, we're sitting here with fairly high oil prices, to say the least, and the consumer is looking to save money anywhere they can. Ross, and I know we'll go into TJX in a minute, but Ross has a bit of an easier model to manage than TJX does, because TJX is so diverse with so many different formats, and Ross really stays in its lane. But it just demonstrates that company, and it's been like this for a long time. They have been a stellar performer for as long as I can remember, and kind of been in the wake of TJX, and that's not meant pejoratively. It's just that, TJX gets all the plaudits because it's so much bigger, et cetera, et cetera. But Ross is an outstanding retailer, and certainly, in the world-class category. It's just, it just demonstrates that the consumer, it's not hurting, but the consumer is looking for ways to save money when they can, and Ross's performance is indicative of that.
Oh, absolutely. I mean, you know, they're capitalizing on the trends, that K-shaped economy, which of course we know Besant doesn't like or doesn't agree with. At the end of the day, the low-income consumers, as you say, looking for value. Also, you've got people trading down as well. So moving on to TJX, as you mentioned, I mean, different kind of reaction, obviously. I mean, solid numbers, but it looks like that forecast seemed to concern the market somewhat. What is so different about what they're doing compared to Ross, as you mentioned?
Well, again, with that diverse business model, and you're selling everything from furniture to towels to, you know, food, TJX is not going to be perfect all the time. And I put a quote out the other day that said perfection is difficult to attain and probably more difficult to maintain. And I think the street has gotten used to TJX just not hiccuping, not even hitting a speed bump since you know we got out of COVID, and that's just not realistic. There are going to be times where a company's going to hiccup a little bit. The assortment's not going to be flawless. The consumer may find other alternatives for a short period of time, and that's why retail is not a short game. The best retailers in the world plan for the long term. They're not going to worry and wring their hands like the equity markets do over a quarter that looks a little choppy. They're going to tend to their knitting, and that's exactly what I expect TJX to do. We've seen this movie before with them, and I think the thing it'll play out. The back half of the year, in my mind, I know that there's been some concerns out there, but I think TJX will outperform the back half of the year.
Okay, something to keep an eye on. But as far as what happened with Walmart, I mean, the headline with the comp sales obviously being the lowest in 6 years was a little bit sort of eyebrow raising. But if you dig into the numbers, it really didn't look that bad, Charlie. And now, sort of pushing the story forward, you've got this kind of tug of war between the analysts who are kind of, you know, having this sort of classic debate about sort of the short-term domestic growth and the long-term fundamentals here. I mean, can you sort of give us your perspective on what went down there? I mean, many say it was to do with the valuation rather than what they actually reported.
I think we talked about this last quarter as well. The valuation's gotten pretty stratospheric. You know, last quarter it was in the 40s. Now it's in the high 30s. That's pretty high, and that's rarefied air. And I think that, in a way, puts a lot of pressure on management to achieve the quarter-over-quarter results that the street seems to like. I've never been a fan of quarterly reporting. I think I've made that point clear over the years. I don't think the best retailers work that way. I think you have to plan for the long term. And if there's a retailer that's done a better job of planning for the long term than Walmart, I want to meet them, because these guys have made strategic moves in the past. They're making them now as well that have just knocked the lights out. You know, this acquisition of Vibe is not the same as, you know, the moonshot with Jet, but it's indicative of how innovative and creative this company can be. 2% comp. Okay, we've got $700 billion in revenue. I'm not real good at math, but that seems pretty good to me on a dollar basis. And when you look at last year was in the mid fours, the year before was in the mid fours for the second quarter, 2.5% is nothing to sneeze at, especially in this environment, especially when they've rolled back 11,000 prices since the beginning of the year. And that's going to flow through. It's going to hurt your comp now, but you'll gain more customers, and that will flow through over the longer term.
Yeah, I mean, they've had to be pretty adaptable in this kind of environment as well. But Charlie, really appreciate the breakdown. Thanks so much for all of that. Charlie O'Shea from O'Shea Advisors, appreciate your time. Let's trade Walmart now with Tom White, host of Fast Market. Good morning, Tom. Tough day yesterday. We continue to see it under pressure again today. Just walk us through an example trade.
Yeah, down double digits as far as percentage move goes, and hitting 9-month lows in today's session, just above $102 a share. So it's been under pressure, to say the least. Those comps that came in at 2.6%, far below what the street anticipated. You know, they were pretty upbeat on the conference call, but at the same time, they lowered guidance for the current quarter, while just giving inline for the full fiscal year. So inflationary pressures hurting that. And then you got to think about the forward valuation. That's what I think has been hitting the stock. So I looked at a strategy. You know, you could buy the shares here on a steep discount to where they've currently been trading, but maybe you just want to profit if it doesn't pull back even more, or if it does, you'll get to buy the shares at a cheaper discount to where they're currently trading. So I looked at a cash secured put here, and I went out to the September 11th weekly cycle. So 21 days to expiration. I'm just selling an out of the money 100 strike put. You're going to collect a credit of roughly about $1 per put that you sell. So there's what you can make, $100 per put that you sell. But the idea here is that if the stock continues to move down and goes back below 100, if you collect that dollar credit on each put you sell, your break even goes down to $99. That's over 3% below the current share price. So you'd be buying the shares at $99 as opposed to buying the shares outright here at just above $102 a share. So that 3% discount. Now, if the stock doesn't go below 100 over the next 3 weeks, then you just get to keep that $100 credit that you collected on this. So it's a twofold type of position where I'm looking to buy the shares if it does fall further, but if it doesn't, I can still profit, because if you think about it, Sam, if you put a bid in for $99 on the shares of stock where you want to buy them, you might never ever get filled on those, right? This allows you to participate in profit if it doesn't fall, but if it does, you're willing to buy the shares at $99 at over a 3% discount to where they're currently trading, Sam.
Tom, thank you so much. Walmart continues to be under pressure, as you say, today down 1.3 right now. Thanks so much, Tom. All right, and just looking at these markets, stocks are higher, but chips are down. We've got obviously yields on the rise here. Thanks so much for joining us today on Morning Trade Live. I'm Sam Vitus. You've got Trading 360 up next with Marley Caden.
Live from Chicago, this is Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
Things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Happy Friday. We're 90 minutes into the trading day. Welcome to Trading 360. I'm Marley Caden, coming to you live from our Chicago headquarters. Here's what we have coming up on today's show. We'll spotlight the latest AI shopping trends with the team from Adobe Digital Insights. AI-referred shoppers generated 53% more revenue per visit than non-AI traffic. Vivek Pandya will join us to dive into the data. Our disruptor is Broadcom, with Bloomberg reporting the company is seeking more than $60 billion in debt in the latest AI chip financing deal that will benefit Anthropic, among other names. Alex Coffey will take a closer look and also have an example trade for us. Then in our 360 round, the panel will examine the very volatile memory stock trade. SanDisk is up more than 30% this month, but it's still more than 30% off of June's all-time high. Let's check in with the markets on this last day of trading for the week. We've got green across the screen. The S&P is trading up about 0.5% at 76.43 right now. The Nasdaq up more than 0.1%, 29,252.95. For the Dow, we are up 0.75%, 53,164, and the Russell 2K is up 0.4% at 3,421 right now. On the 10-year, we are even higher. We're at 472, but the dollar is unchanged on the session. Gold is at 46.45.90. That's also higher. Crude oil ticking up to 86.56 a barrel. Slightly lower than the levels we topped yesterday, but still elevated on the week. Bitcoin, though, continuing its rise. We are now at 77,525. It has broken out of that range of 6.5% on hopes that the Clarity Act could be passed at some point in the coming months here. Do you want to take a look at some stocks on the move, though? Today, joining me in studio here, Jenny Horn, co-host of Next Gen Investing, to take a closer look at Ross Stores this morning. I covered these earnings on Market on Close yesterday, and about as clean a beat as you can ask for in terms of a retailer. Comp sales up 10%. They said it was driven primarily by an increase in traffic. It's what you want to hear from a retailer, and we're seeing it rewarded today. They're up about 4%. So walk us through what your takeaways were just from the overall results, and if the sell side has had any commentary since.
Well, so I will totally agree with you. I mean, this was as far as a perfect report in retail as we've seen. Traffic is surging. Comparable sales rose 10%. Driven by customer traffic, marking now the second consecutive quarter of double-digit comparable growth. Traffic comps are generally viewed as more sustainable than just like pure price-driven growth. And so a reminder of course, the weakness we saw in Walmart, different type of company, but they reported a comps figure that disappointed, and that was really a huge reason we saw shares get punished. But Ross, with overall just improvement, total sales climbed about 13%. Now, they did say that gains came from these new customers. Last customer was returning, and existing shoppers visiting more frequently and spending now more per trip. And so growth was broad-based across various demographics and regions. Now, the business is also executing beyond just a tariff benefit. We did see operating margins still expanded about 205 basis points, excluding that benefit, showing now this genuine operational improvement, and guidance was also raised. Management boosted the second half of their year expectations, now guiding for third quarter comps between 6 and 7% and fourth quarter comps between around 4 and 5%. Their full year earnings guidance was also increased. And so as far as what is maybe driving some of the more concerning aspects of this report, again, a meaningful portion of these earnings were a one-time beat because they included 60 cents a share from the $253 million tariff refunds. Without that benefit, the headline beat would have been far less dramatic. And so actually very similar to what we talked about with Lowe's as well as Target. Both saw this one-time earnings per share impact. And so that did inflate, of course, some of the profitability this quarter that's not been read as like organic growth. But comparisons also get tougher from here. They did warn about the significantly harder year-over-year comparisons now into the back half of 2026. And expectations are high after 2 straight quarters of 10% plus comp growth and another guidance increase. It does seem like right now this continued outsized sales growth is going to need to continue, frankly, to justify their valuation. And so the street liked this name. I saw a lot of analysts just reiterate their current stance. But amongst the off-price retailers, Ross historically is the lowest price points of their average items. And so that puts it below like a TJX or a Burlington. So this is a true value play.
Yeah, it certainly is. I mean, and as far as the street, I know I saw a couple price target increases this morning when I was just sort of looking at some of the reaction here. But what is the sell side saying about what's happened with Ross here, and how are they looking at it? I mean, you did highlight a significant tariff impact there, and also that they now have harder comps as we move into the second half of the year.
Yeah, and I will say that not like a ridiculous forward PE, but trading almost at 30 times, which is expensive in retail. But if you look across the board, first of all, there are no bears in this name. There are right now definitely more skewing towards that bullish camp. You have 14 buys per FactSet and around 7 holds, so not a huge amount of analyst coverage. But if you look across like the overall conviction today, we started seeing Evercore raise their price target to 290, Bernstein also 240, Wells Fargo raising their price target to 248. So while some of these are a bit more modest, we're trading at around 237 and some change right now. A lot of these price targets would at least recapture their old highs. Like 290 was Evercore. That was one of the more optimistic takes I did see. As we also did see like UBS, that was definitely more modest to 239 from 232. All-time highs in this name, though, are 257 a share even. And so we're down about 7.6% from that level. We are actually still also lower this week. And so it does seem like the street expects more moderation, but like not huge upside for a space that's typically just less volatile than, say, like AI-driven tech.
And Jenny, really appreciate you breaking down those numbers for us and also the reaction from the sell side there with some of those price target increases. I think the highest one I saw was 310 from Truist. So some potential upside there. Really appreciate it. Jenny Horn, co-host of Next Gen Investing. I do want to broaden out our conversation, though, welcome in Chris Vermeulen, the founder and chief investment officer at the Technical Traders. Chris, great to have you back on this show. Now, I was looking over the notes you sent. You still see the primary market trend as up. Earnings have been supportive of equities, but the 30-year Treasury you're flagging, we hit 5.3, a little higher than 5.3, the highest level since 2007. We're hovering just below that right now. How are you looking at rising long-term rates and any potential problems that they may have or cause to this bull market that we have?
Yeah. So when we take a look at the markets, I mean, the equities market is clearly still in an uptrend. The NASDAQ technology is struggling a little bit, but when you look at the equal weighted market, the broad market, we continue to muscle our way higher. It's just the semiconductors and some of the tech are holding things down, which, you know, we see the AI space has got mega debt. We got huge borrowing, huge debt going towards all the data centers. Obviously, rising rates is not going to bode well for all of this debt. And that's what we're starting to see is this one of these big problems of the interest rates starting to creep up and starting to run. The 30-year yield is, when you look at it from a monthly standpoint, and it doesn't matter if you look at the 5-year, the 10-year, or the 30-year, all of them have the same chart pattern pretty much, and they continue to start to break out. They have a bullish chart pattern pointing to much higher pricing or a higher yield, which is putting a lot of pressure. People are starting to lose faith. People are nervous about holding dollars. They don't want to get into the U.S. bond market because they're fearful. So where do they go? They need to go to a different type of currency, right? We're seeing people move into Bitcoin, which is obviously cryptocurrency. We're seeing gold. It's another type of currency. So we're seeing the precious metal space and the crypto space really find a tailwind here, and money's moving out of the dollar and kind of away from the bond market. So this is telling us there's global fear, there's long-term fear. We got a lot going on underneath when you look at the market. I think concerns are starting to climb for the stock market to run out a win. But as you mentioned, we have good earnings. The trends are still up, but investors are getting worried about holding the dollar, and so they're moving to different asset classes outside of the equities market right now, looking for that safety in different currencies.
And Chris, if we continue to see yields rising along with equities, can stocks continue to make new highs if we, tick on the 30-year back above 5.3% or even higher or even more towards the middle of the curve? If those yields keep going up, how much longer can this rally continue?
Yeah, well, that's the big question. They can, but there's no doubt rising rates are going to continue to keep some pressure on the equities markets. Now, the U.S. market is the top performing market in the world, is really starting to draw money in from the whole world. People are moving into it, and it's really driving things up. The AI bubble is still here. Anthropic's set to be a bigger IPO than SpaceX. Anything IP, everybody wants in. So I still think we're going to see equities grind their way up. I still think semiconductors are still a little bit of a bout of worry and concern. There's been a wave of news and costs rising, and there's been some money flowing out of there. But I still think we're going to see another wave of buying. And I think the stock market has potential for another leg up. I think we could see the S&P 500 run about 10%, the NASDAQ over 10%. There's still some pretty good upside in this market, but if rates really pop and pick up speed, that is going to definitely mute the upside potential in equities.
And so, Chris, let's talk about Bitcoin and metals here, because I know you said we're seeing a flight into those, and I know you also like them right now. So let's talk about Bitcoin, because I was just at the top of the show talking about us being north of 77,000. Since early June, we've been sort of trapped in this range between 60 and 65. We've got this renewed push for the Clarity Act, plus we have people trying to find safety in other assets and other currencies here with this move for Bitcoin. How are you looking at playing this rise in Bitcoin, and where are you seeing the opportunity?
Yeah, I'm not looking to get involved in Bitcoin at this point, but there's an ETF around it. Just Block, B-L-O-K, is an ETF around the blockchain. It's coming back to life. It just broke out today after taking a little bit of a breather and a pause. It actually looks like it's got some pretty good upside move. It looks like it has about 10% to around $69 per share. I like this chart. I think we're going to see Anthropic come to the market. It's going to spark a lot of people just to get excited in everything AI. And so blockchain, I think, and crypto are going to come back to life. I think we're going to see a lot of speculative money pile in. And speculative money loves to go into small caps, which are doing well, Bitcoin, precious metals, and the AI space. So I think Bitcoin's had a very strong pop. And this is the same with gold, silver, and miners as well. And the drop in the dollar, it is a news hit. I mean, the Treasury hasn't really done much yet. We've just had statements, and of course, now we've got a huge move on this news. So I'm still letting the market digest. This market could still reverse, right? A lot of these pops are on news, and we're going to have to see how this unfolds. But there's no doubt there's momentum in the Bitcoin precious metal space, and we need to be aware of that.
All right, let's talk about silver. You mentioned silver there and the miners. I know you like SILJ, that's a silver miners ETF. How are you looking at that? Because I know you trade from a technical perspective, but is there also a fundamental argument here given silver and its role in the build out, not just being a precious metal here, but also an industrial metal?
Yeah, I mean, well, for precious metals almost across the board, silver even more so, there is a massive, strong fundamental story. In fact, every year the fundamental story for precious metals gets stronger and stronger. So there's no doubt there's a very good fundamental story for precious metals. Silver is about 50% off its highs. It's pulled back quite a bit. But long term, I mean, it has got a very strong story that I think is going to keep it moving higher. Now, I think there's a way to play it. I think the silver miners have got some great potential. They've been very explosive. Over the past few weeks, they've built a very strong bullish chart pattern known as a bull flag. I think we're going to see about a 15% move to the upside. I think we could see the dollar have a quick drop, and we're going to see precious metals have one more pop. And I think that's going to fuel SILJ, which is the silver miner junior stocks. And so I think there's a good move in there. There's definitely much more momentum in miners than gold and silver itself. So there's definitely money moving into the leverage way. Like, you know, gold and silver move much slower than the miners. So people are definitely moving there. You kind of want to follow that momentum. This is a pure momentum play because we had news, it's triggered a big wave, and that wave hasn't come to an end yet.
Chris, really appreciate you taking the time to be with us in advance of your weekend. I hope you have a great weekend. Chris Vermeulen, founder and chief investment officer at the Technical Traders. We've got plenty more for you today on Trading 360, so don't go anywhere. We've got the big three next: 3 stocks, 3 charts, and 3 trades. Rick Ducat will take us through the technicals. Joe Teague is joining us with his trades for Costco, Berkshire Hathaway, and Caterpillar. That's next on Trading 360 on Schwab Network.
AI reports its earnings. Join us Wednesday, August 26th for NVIDIA's second quarter report.
Market on Close will give you 30 minutes of extended coverage to react live to the numbers that matter. You'll get instant feedback from the report, where the stock is headed, and what comes next in the AI trade, because where NVIDIA goes, so could the market.
Tune in to Market on Close for NVIDIA's earnings on Schwab Network. Have you ever watched an interview and thought, I wish they had 5 more minutes? Or I want to know how they discovered that hidden gem? That's exactly where Market Matters comes in. I'm Marley Caden, and our podcast is slowing things down. We're going beyond the earnings to get to the heart of the people and companies driving the global economy. If you want the full story, not just the headlines, Market Matters is for you. Subscribe wherever you get your podcasts. Welcome back to Trading 360. I'm Marley Caden. It's time for the big 3. We've got 3 stocks, 3 charts, and 3 trades for you. Rick Ducat will take us through the charts. Here to take us through the trades today, Joe Teague, Portfolio Manager, Equity Armor Investments. Joe, great to have you on. I would love to kick things off with a big picture thought on the markets. We've got a nice green board right now. We're hanging on to the green. A nice rebound from the sell-off we saw, but not enough to correct the week on the whole for us, at least at the levels we're at right now.
Thanks for having me. Yeah, I think this week has been hyper-focused on interest rates and treasuries and the yields just rising, and that's very understandable. The market's kind of calibrating, hey, we got these higher oil prices, we have this increased spending from all these companies. Inflation is just going to be higher for the period of time, and that's a realistic concern. For me, I think that's a very rational thing for the market to be doing, and just kind of readjusting here and kind of pricing these risk assets appropriately, thinking they're going to have to be borrowing at higher borrow costs. Having said all that, I think the base is still there for continued growth in the economy and continued success in the stock market. It's just going to have to be recalibrated with the exception or the understanding that interest rates will be a little bit higher and inflation will be running hot.
All right, so then let's talk about your first trade here. We're talking about Costco. We're going to hear from Costco on September 24th, so just a little over a month from now. How are you looking at Costco?
Yeah, just, we've seen the concerns out of Walmart. We've seen the narrative coming through, maybe some crunch on some of the consumers. But yeah, I'm thinking in the world where you're seeing this higher inflation, you're seeing these concerns from customers, you're going to have these retail clients being value oriented. Of course, I love Costco. Of course, they're a company that has extreme customer loyalty. A lot of their revenue just comes from the fact that their customers are loyal to them, and their inventory turns over so rapidly. So I think they're somewhat sheltered from inflation that happens in a very short shock. And I think in the long term, they're going to be a company that's going to be fine, especially in an environment where you see continued economic success in spite of higher than anticipated inflation. So I think the risk for Costco, of course, is their high multiple, very rich prices to be paid. Of course, that's something I'm very cognizant of. But in this environment, in this world where we're seeing higher interest rates, higher inflation expectations, but massive spending from these data center companies, massive inflow of capital into the economy. I think Costco is be a good spot to be at, and kind of like maybe not defensive, but more defensive than other places in the market to hide out during this period.
All right, and we got a good report from BJ's this morning as well. Perhaps that could be an indicator for Costco. Moving higher today on the session, we're up almost 1.5% for Costco. But Rick, as we look at Costco and its individual chart, I mean, it's up so far year to date, but it is underperforming the overall market. So what are you seeing in the technicals, and what levels stand out?
Yes, I would say as well, too, that after earnings, first of all, we had our highs, 1096.50, then earnings were right here. We've kind of been range bound since then. We did have a sharp drop off from those highs, but for the most part, we've stayed between this reddish line here, 994, and these lows, 907. So more of a sideways kind of grind with some volatility in the meantime here. So for further downside levels to keep track of, our recent relative lows come in near 926. We also have another notable low point here near 917. If we were to push upward here, we would fill the gap near 956, and we also have highs near 979 and 988. So if we were to also think about our moving averages next, first of all, our prevailing price pattern here has been more of a symmetrical triangle connecting the highs up here and the lows here. So we have two lines kind of converging toward each other. We do seem to have broken to the downside from this one. But now we can also see that our 5-day and 21-day exponential moving averages come together right around 949, 950 or so. That lines up with our old trend line as well. So that gives us a confluence point to watch out for. RSI moving lower here, we have a downward trend line in play. We are below the 50 midline as well here, but perhaps poised to recross above that level here. So look to see if the bulls can reassert themselves and push above that resistance confluence, and in turn push the RSI above the 50 midline here. So now if we look at volume profile, we can see here that our point of control comes in at about 945. We have our node between 935 to about 960 or so. To the downside, another node near about 912 or so. To the upside, another one near about 1,000.
All right, and right now Costco again moving up on the session. We're up about 1.4% for Costco, trading about 946.22. Your next pick here, we've got Berkshire Hathaway, the new CEO Greg Abel changing the investment strategy. A lot of announcements and headlines around positions they're exiting, positions they're taking bigger stakes in, new companies they're looking at. How are you looking at Berkshire and how it's positioned right now, Joe?
Yeah, I mean, this is clearly the most defensive name of the three that I've put out there today. Obviously looking at, just maybe repositioning outside of some of the pure growth names with these higher interest rates. I think they have a business that in spite of their smaller assets, their core business is going to be centered around this insurance and reinsurance pathway. They have, of course, railroads and everything like that, even an oil infrastructure play. So yes, it's a very defensive name. If there is going to be sustained growth in higher inflation, just kind of tricky for some of these growthy names. This is going to be a great period for Berkshire. So yeah, I think this is absolutely, for me, time to be looking at companies like this that are going to be able to weather the storm regardless of what pricing is doing.
All right, Rick, so as a defensive play, if we look at the setup for Berkshire Hathaway, what are you seeing in the technicals here? I mean, this is a beloved name with a new person at the helm. We don't have the Oracle of Omaha anymore, but still, of course, very closely tied to Warren Buffett.
Sure, not too terribly much move over the past 251 days. We're only up about 2% from there. If you would have asked that question maybe a few weeks ago, it would have been pretty different. We had highs of 537.74, but those have mostly evaporated after earnings. We had a very sharp rally off of this repeated floor that we tested near 486. We also had a small gap here that was formed. That's around where we hit our lows near about 499 or so. A high point here, 507, another high near 515. Those stand out as levels to watch for further resistance as well. Our trend line is still in play here too. We are on the verge of potentially pushing beyond that boundary here. We also have a downward sloping trend line that we could also take into our calculations here as well. So look for a breakout beyond either of those two levels for further directional bias. So now in this case, our moving averages are a bit more mixed up here. We have our 5-day EMA in dark blue. We have our 63-day EMA in gold here. Those come together roughly 498 to 500, both of them here. So this is a general area of importance from a supportive level here. If we were to break lower, 251 in orange comes in near about 490. If we were to push higher, our teal 21-day comes in at 505 and roughly lines up with our downward sloping trend line. So some notable inflection points here to consider. RSI has shown a breakdown below our green trend line. We are below the 50 midline, but also today it looks like our red downward sloping trend line is being broken as well. So if we do start to push upward, again, like our last chart, look for a push above the 50 midline and for RSI to make new highs above its relative highs that we saw a few days ago along with price. Volume profile in this case is pretty straightforward. We can see that much of the trading activity has taken place here between about 490 to 505. Point of control is around where we've solidified during the past couple days for now, near 497.
All right, and Berkshire, as you mentioned, pretty much unchanged on the year as we look at its chart overall. But this last one, a very different story. If we look over the last 52 weeks, we're up close to 100% for Caterpillar, which is becoming more and more a part of this broader AI conversation, Joe. So why Caterpillar? How did it make it into Big Three today?
Yeah, this is of the three. This is the most cyclical choice. It's very tied to the AI infrastructure spending play. It's tracking a lot of the semiconductor stocks, but what's different from them, from the hyperscalers, different from the chip makers, is it doesn't matter if their next chip isn't the best on the line. It doesn't matter if their large language model falls flat. They don't have any of that. They're just picks and shovels play. If the spending continues to be there, which it has continued to rise, people are going to need to build data centers. They're going to need to build buildings. They're going to need to move dirt. They're going to need these big machines, which Caterpillar is one of the few companies that offers. So yes, I absolutely think this is a play for that. Of course, obviously they also are now gaining a lot of traction with their power generation, their turbines, which are really important to this data center move. And again, this isn't going to be a narrative of they don't have the best model, or they're not meeting some benchmark, or maybe China has a better model right now. It doesn't really matter for Caterpillar. Just what really matters for them is that these companies are going to continue to spend and continue to invest. And every indication that I've seen over the past year has been that these companies are continuing to spend. They are continuing to invest. They believe in this future. And of course, Caterpillar will be the picks and shovel beneficiary.
All right, Rick, so as we look at Caterpillar, we had some pretty steady momentum in this name all the way through July, but then since July, it's been under some pressure and that momentum has fallen off. So what levels are standing out to you here?
Something about an AI controlling a giant bulldozer makes me feel a little queasy, I gotta say. But, to think about, I see Joe's point, obviously, just kind of being lighthearted. But still, we can see highs 1073. We have our trend line pointing downward here to give us a downward sloping trend line that is still in play. Meanwhile, we have this gap that formed here to give us some recent lows. We can see that very modestly mild sloping upward trend line is still in play as well. So horizontal levels, 776, and then our gap that we just mentioned here comes in at about 752 to 727. We can also see this was a repeated floor many times around 665. Meanwhile, to the upside, another similar floor here near about 850 or so. Kind of a little muddier at this point here, but that still is a notable area that traders may have their eyes on here. Another series of highs and subsequent lows near 933 as well stand out. So when we consider our moving averages in our next case here, the shorter term trend shows more of a downward trajectory here. Our 5-day, 21-day, and 63-day are all pointing downward. They're somewhat pulling apart from each other, which suggests the trend is not changing back to upside yet here. But our 5-day EMA in dark blue, 828.55 is where the next resistance area would be. Notice as well our 21-day lines up with our trend line near about 852. RSI below 50 once again here. So not really a super clear trend at this point in the shorter term. So again, look for a crossover above 50 if you're more bullish, or a push below 30 if you're more bearish. Volume profile shows we have some very distinct nodes here. So it's kind of a little more choppy, but the areas in question stand out here near about 815, 820 or so. One more to the downside between 750 to 775. Another more prominent one as well, a bigger one here, 860 to 915 roughly.
All right, and Caterpillar today just trading about 0.5% higher on the session at 819.11. Joe, really appreciate you being with us for the Big Three today. Joe Teague and, of course, Rick Ducat, our lead market technician, for breaking down the technicals for us. Coming up next, the team from Adobe has released new data on AI-driven web traffic. We'll dive into the numbers with Vivek Pandya from Adobe Digital Insights after this.
Moves markets. Download the Schwab Network app and get live coverage wherever you are.
Hey, Dad, I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The 2 grandchildren, planning for their college educations. Someday it'll be their turn.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Morning movers, be the first to find out what's shaping early market action. Tech Check, Options Corner, Futures Focus, Technical Analysis. Morning Movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
Schwab Coaching is concepts brought to life in the real world.
It's absolutely world class. We have coaches who have been in the industry and around the industry for a long time.
We have different formats because people learn differently at different times.
We have webcasts running through YouTube all day, every trading day.
We've got events that are making their way around the country.
So you get that opportunity to share experiences and knowledge with other traders.
How incredible is that? And it's free.
Stay connected to what moves the markets. Download the Schwab Network app and stream anytime wherever you are.
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
I'm Jenny Horn. We go beyond the headlines, tracking the trends, sector moves, and fundamentals shaping the markets in real time. This is Schwab Network. Subscribe at schwabnetwork.com. Stay connected to the markets with Schwab Network.
Tune in 24 hours a day, 7 days a week on schwabnetwork.com
And on all your favorite streaming services. Schwab Network. Available anytime, anywhere, on any device for free.
How's it going?
First day, so.
Sometimes, you know,
Next.
Try it again.
you could have done better.
Please.
Same goes for where you invest. Level up and invest smarter with Schwab.
Welcome back to Trading 360. I'm Marley Caden, live in our Chicago headquarters. It's time to spotlight AI and the impact it's having on e-commerce. According to recent data from Adobe, AI-driven traffic to U.S. travel sites is up 119% year over year in the month of July. It's exploded more than 1,800% since Adobe began tracking the space in October of 2024. Let's dive into the data with Vivek Pandya, the lead analyst at Adobe Digital Insights. Vivek, great to have you back on. I wait for these reports, you know I do. And this one really seems to be showing that we have closed the gap between the AI conversion and the non-AI. So I guess let's stay high level first and just walk us through what you see as the most important takeaways from the report.
Yeah, I think we are continuing to see that escalation in terms of the performance of the AI traffic across industries. So in retail, it's up 62% year on year. And travel, as you mentioned, it's up over 100% year on year. And in financial services, it's over 30%. And that's all happening at a time when the conversion rates or the likelihood to purchase on site, that rate is closing in. So it's already overperforming in retail above 60%, and now in travel, it's only underperforming non-AI source traffic by 1%, when about a year ago, it was more than 40%. So it's all indicative of a consumer that's really relying on the AI agents through their buying journeys, and as they get more comfortable using them, they're purchasing at a higher rate.
And so, Vivek, let's stay with retail here for a second. You mentioned that we've got these AI-referred retail shoppers. They're spending more, 53% more, in fact, and they're also more likely to make a purchase. So what is the driver behind that? Why is the AI-referred shopper not only more likely to make the purchase, but also more likely to spend more?
Well, what we're finding both through the data that we have through the Adobe Analytics platform and the survey research is they're essentially pre-qualifying themselves before they make it onto the retail site. So they're having that discussion back and forth with the agent. They're getting a sense of comparisons, prices, features. And so by the time they get onto the site, they're really well primed to purchase and kind of get familiarized with the brand, explore the pages. All those metrics are looking good as well. The bounce rates are looking really great if they're coming from the AI sources. So as a result, you have a consumer very much feeling comfortable purchasing, and getting that peace of mind and validation from the AI agent is putting them in a position where they're likely to close on that purchase.
All right, then let's talk about travel, because that was arguably the most dramatic number in the report, with it being up 119% year over year in July. But more importantly, that conversion gap has gone from 47% lower than traditional traffic to, as you said, just 1%. I mean, we've closed the gap here. Are consumers and how they're interacting with AI, have they essentially moved from using AI as inspiration and research to now actually trusting it enough to make travel decisions and purchases through it?
I think it's both, really. They're still using it quite a bit for research, and you think about using it for retail products and then travel, you're really upping the stakes in terms of cost and investment. And what we're finding is, especially where we're here in the summer, you've had fuel price volatility that impacts ticket prices, and you have a consumer that's wanting to understand that they've taken everything into account in planning their trip, and so they do get that sense of validation from the LLM agent on that front. And then as they make their way over to the sites, that improvement is that the results that they got is improving the purchase rate. So it's really indicative of a consumer that's more comfortable using it, trusting it. We're seeing the trust levels of the AI results really just surge. Those are over 80%. So you have that sort of faith in what the agent is providing from a results standpoint. So then the comfortability, upping the stakes, using it for travel and more services is happening very quickly.
And there is a very interesting contradiction in the data, and it's something that we've talked about more broadly about the discoverability on certain pages and how readable they are to these agents. But consumers are using this AI to find their products, to find their travel, but many of the brands are still not ensuring that their pages are readable to these LLMs. So how big of a revenue opportunity is being left on the table when certain LLMs can't access large portions of these sites?
It's a great point, because we look very closely at machine readability and how these agents are absorbing content across the sites. And we see about a third of content is not machine readable across many of these pages. So the upside is pretty substantial, especially for brands that break out and really take this opportunity to understand, is their content well structured and well positioned to absorb real AI agent visitation, and ensuring that it's taking in all that content and serving it back to the user, because the agent is also pressurized to provide the best experience of the user. So it's quickly mapping across all this content and trying to serve the best results to the user. So machine readability is a key component, and overall showing up as a brand across multiple surfaces to provide a sense to the consumer that they're well respected across multiple sources is very important too.
And I mean, the numbers are staggering. The average visibility score for retail homepages is only 61%. I mean, they're leaving 40% off the table, basically, that these LLMs can't access. When you look at the airlines, it's 42%. So I mean, that's 60% of all of the content on their sites can't be read by an LLM. I mean, in theory, Vivek, we're talking about how many people are using these things to plan and book travel. Could they potentially, through their use of an LLM, then be leaving the most affordable flight option or the better flight plan for them or the faster trip on the table simply because whatever site they were using isn't readable to this LLM?
I think from the perspective of the user, and it's a really good point to point out, is what is the user feeling like they're experiencing? They're assuming they're getting the best options, but as you mentioned, if you have machine readability issues across your content, then you're not absolutely being surfaced to the user. So it's important to think about it through the lens of all this type of content. So help pages, customer service pages, FAQ, all of that needs to be very well optimized for agents to read it and serve it back to the user, because the customer is already, dealing with a lot from a day-to-day perspective, managing prices, cost of living, all that. So they're looking for that experience that really synthesizes all the options out there for them. And they feel that the agents are delivering in that way. So it becomes actually more important for these brands to ensure that they're breaking through and thinking about how they're showing up, not just for a user and their experience on a laptop, desktop, smartphone, but actually the agent and how quickly it's absorbing that content.
And so, Vivek, who's doing it well right now? Because I mean, there's really no counter argument to there being a competitive advantage to having an AI optimized or highly AI readable site here, when we know that every time we talk, the number's just going higher and higher and higher with how many people are using AI, how many people are converting what their usage to a purchase of some kind. What companies or what spaces are really making the change here? Or are you seeing this being very slow? Are people not paying enough attention to how much potential revenue they're missing out on?
I think you called out, there are absolutely areas for improvement. You think about what's happening in airline industry and certain spaces in travel. But when you look at something like retail and you think about sort of maybe the beauty and health category or electronics, these categories have been adept at providing a lot of rich information, detailed information within their product pages. So they're driving better readability scores. There's much more room for improvement across the board, but you do have certain categories breaking out because of how well they've done it historically around getting that detail. Because when you think about the prompts users are using, there's not a lot of homogeneity to it. It's not a, I'm going to buy a pair of jeans or buy, a clock. It's very specific to the conversation they're having with the agent. And as a result, you have to have lots of different levels of detail to meet and answer the criteria levels for that user. So providing all that across the board will be absolutely important. And then also ensuring that you're providing great results and experiences to your users so they're evangelizing them across different platforms like YouTube, like review sites, and making sure all of that, you're showing up really well on that front. Because if the agent detects that you have consistency in the experiences you're providing, it's more likely to provide it as a top option for the user.
Vivek, always such a pleasure to talk to you. Really appreciate you joining us to take a closer look at the most recent data from Adobe Digital Insights. That's Vivek Pandya, the lead analyst over at Adobe. And coming up next, we've got the disruptors. Broadcom ticking higher this morning after a Bloomberg report that the company is targeting a large debt raise. Alex Coffey will take a closer look and have an example to trade for us after this.
The Schwab Network.
Tune in 24 hours a day, 7 days a week on schwabnetwork.com.
And on all your favorite streaming services. Schwab Network. Available anytime, anywhere, on any device for free.
How's it going?
First day, so.
Sometimes,
Next.
Try it again.
you could have done better.
Please.
Same goes for where you invest. Level up and invest smarter with Schwab.
I'm Nicole Petalides, live at the New York Stock Exchange, and this is the Watch List. Your midday view into the trends driving the markets with a sharp focus on technology, innovation, and companies leading the next wave of growth. Big movers, real-time interviews, and insight from analysts, founders, and market voices you trust. The Watch List, 2 p.m. Eastern, only on Schwab Network.
Welcome back to to Trading 360. Let's check the markets. We're 2 hours into trading here. Take a look at how things are going. We've got green across the board still, and as Alex Coffey just said to me, who's sitting down and be joining us in a second, we are ripping now. The S&P is 0.6 higher at 76.90. The Nasdaq more than 0.5% up. The Dow is up close to 0.9%, 53,210, and the Russell 2K is up 0.75% right now at 3,013.91. The leaders on the day, Moderna back up again after a more than 100% move to the upside following its trial results with Merck. Coinbase moving higher, crypto-tied stocks doing very well. Albemarle also up, and Freeport-McMoRan higher on the session. As we look at the laggards, though, on the session, smaller moves to the downside, but Marvell has the biggest right now, down about 6%. Edison also lower, Sempra and Quanta Services each down a little bit more than 3% there. I did mention Alex Coffey was here to join us for the Disruptors, our senior equities contributor. Take a closer look at Broadcom today. Alex, we've got another announcement here of another potential large debt raise to fund this AI infrastructure build out here. Again, this is just reports of a potential deal, but most of these reports in other cases have come to fruition. So take us through who's reporting and what they're saying.
Yeah, and so, for Broadcom, as you mentioned, the AI infrastructure build, it just keeps getting bigger and bigger and bigger. Bloomberg's reporting that the company is in talks to raise more than $60 billion in debt for a new AI chip financing deal that could ultimately approach, upwards of $100 billion, including junior debt tranches. But the financing would help companies like Anthropic secure access to critical AI chips and computing infrastructure, while also supporting Broadcom's push to expand its own custom AI chip business and compete more directly with NVIDIA. Private credit giants Apollo and Blackstone are reportedly involved. So you got some heavy hitters when it comes to private credit. And this is going to potentially build on an existing partnership that has already financed AI compute capacity for Anthropic in the past. And it just generally this story, it highlights the enormous capital demands for this AI infrastructure boom. Broadcom CEO has said AI chip sales could top more than $100 billion next year, and its latest proposal underscores just how much money is flowing into this race for this compute power. Surprisingly, though, you actually see Broadcom moving higher, and some of this might just be because Broadcom kind of fell off a cliff this week, but other companies, when they started raising money, was more worrisome. I think it's a little bit different for Broadcom because this is directly to build out a profitable business, whereas in the case of, Alphabet or Meta or some of the other companies, it's for something they hope will work and pay off in the end, and there's a little bit of uncertainty still.
Yeah, a little bit of uncertainty, and they also have their earnings coming up. Their September 2nd earnings, so just after we get NVIDIA, we're going to hear from Broadcom. But a nice pop to the upside today, 1.33%. Nothing to scoff at, not a huge move, but a nice move. How are you looking at if we were trading this for example purposes, knowing we have that earnings event coming our way here in about 2 weeks, and also, as you mentioned, that we had fallen off a cliff before some of this moved to the upside?
Yeah, so if you're seeing just an investment opportunity, that's one thing. If you're comfortable with that earnings risk, that's another. But because we have that week next week that avoids it, that's what I looked at for this example trade. So it's a little bit more short dated, and what this is sort of looking for a pop back towards its moving average to the upside around the high 380s. I think it's a 50-day on that. And so with this, it's the 370, 385 call vertical. It's the August 28th. It's $5 debit. The idea here, again, buying the dip, but doing so in a risk-defined way. Short dated has to happen by the end of next week. 375 would be the break even, but you can make 1,000 and you only risk 500. So a little bit of an extra payoff if you get the move, but you need the move and it needs to happen, in a week.
Yeah, it needs to happen in a week. Right now, Broadcom up 1.25% at 368.68. Alex, really appreciate you joining us to take a closer look at the reporting of that potential debt offering from Broadcom and also for that example trade. That was Alex Coffey. Coming up next, it's time for our 360 round. We'll take a closer look at the latest developments in the very volatile memory stock trade. We'll have that and more when Trading 360 returns.
Powered by Ameritrade, unlocking the power of thinkorswim, the award-winning trading platforms. Bring your trades into focus on thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization. and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's markets.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for this stock.
That could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
Hey, Dad, I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The 2 grandchildren, planning for their college educations. Someday it'll be their turn.
This is Fast Market, built for traders who want more than just headlines.
We walk you through trade ideas with structure, risk management, and a focus on execution.
From options to earnings to volatility plays, we bring decades of trading experience to every segment.
With real-time insight across products and sectors, we deliver what active traders need to stay ahead. Fast Market weekdays at noon Eastern, live on Schwab Network at schwabnetwork.com.
Welcome back to Trading 360. I'm Marley Caden. Memory stocks have been one of the most profitable trades in the tech sector in 2026, but the group has also been one of the most volatile. SanDisk is up more than 30 times over the last 12 months, but down more than 30% off of June's highs. Micron, a similar story. We're down more than 20% from its all-time highs. For what's next in this space, let's bring in our panel. Joining us today, Ed Vitowski, Managing Partner at Chapwood Investments, and Bob Lang, Chief Options Analyst and Founder over at Explosive Options. Bob, let's start with you. I mean, memory stocks have been extraordinary. I just highlighted the moves from SanDisk. It's up more than 500% year to date. Micron, I think, is up more than 200%. Even with that pullback and being off of these highs, how are you looking at this trade? Are we at the beginning of a much bigger cycle here? Have we reached a point where investors are perhaps pricing in too much good news? How are you looking at it?
Great to see you on a Friday here, Marley. So I'll tell you what, I think that there's a little bit more to be had in these stocks going forward. And if you believe in the cycle theory, these companies tend to cycle up and down. They call it boom and bust. And when they peak, generally speaking, margins are around the 55 to 65% level. Currently, right now, we're sitting at about 80 to 85% for some of these companies. It's really unprecedented for a commodity item like DRAM or even memory to boast those kind of margins at this point in the cycle. But if you're to believe that what Micron CEO said the other day and the SanDisk CEO said after earnings a couple weeks ago, that there's a plenty of demand in the pipeline. And once they get a hold of the inventory, the supply, that things are going to get more imbalanced, that, it could last until 2029, 2030.
All right, so let's dive in to some of these names. Ed, let's talk about Micron. You have a $1,500 price target on Micron. That's roughly 50% above where it trades right now, a little bit less than that, but pretty close. What specifically gets Micron to that valuation?
Their backlog. I mean, they are not able to keep up with the demand that they have, and that is an absolutely perfect chemistry, if you want to call it, for a stock price going higher. When you have orders on the books and you can't get to them, that is wonderful for that company. And Micron is only able to kind of produce about 50% of what it is that they have on the books for needs. So 2027 is going to be another stellar year for Micron.
And Bob, how constrained is the memory market? I mean, how long can the supply shortage realistically last? We do have some visibility from these names in terms of what they can provide, all very similar messaging in terms of that we can't meet the demand. But realistically, how long can this last? And also, do you still view this business as cyclical? Because there have been some arguments made to me that perhaps we have exited that for a period of time here with this bottleneck.
Well, I'll tell you what, I heard Elon Musk say something, made some comments to Sanjay Malhotra, who is the CEO from Micron, and he said something like, I would like to buy every single piece of inventory that you have, every single piece. Don't give anything to any of your other customers. And obviously that was a little facetious. He was joking about it, half joking probably, but I think that Sanjay said that every single one of his customers have said the same thing. They would like to get a hold of all the inventory that they have on hand and keep it for themselves and use it for their creations of their products. So I think that this cycle can last a little bit longer here. And do I think that the cycle's different? No, I don't think it's different. I just think it's extended out a little bit, Marley, a little bit further than most people had expected. And once we get into 2030, 2031, we get into a new evolution, a new wave of AI. We'll be able to find out more about how important memory is to AI. According to the CEOs from the companies that we talked about, SanDisk, Micron, Seagate, and Western Digital, they're saying that memory is absolutely critical for AI going forward. So if AI is part of our future, Marley, then it's times are different today than they were used to be.
It would be hard to make an argument that it's not a part of our future. But Ed, last question to you. If you could only own one name in this memory space, who would it be and why?
It would be SK Hynix. They represent 50% of the HBM. That's the high bandwidth memory. And they are the winner right now. Everyone just thinks of Micron, but you can't forget about the South Korean company that owns 50% of the HBM market. That would be the winner to me.
All right, SK Hynix, your winner today. SK Hynix trading a little bit higher on the session, along with Micron down a little bit, about 0.4%, and SanDisk just marginally. Really appreciate you both being with us to take a closer look at the memory names. Ed Butowski, managing partner at Chapwood Investments, and Bob Lang, chief investment analyst and founder of Explosive Options. Do you want to check in quickly with the markets here? We're continuing our move higher. We are up 0.7% in the S&P and in the Russell 2000. The Nasdaq up 0.6, and the Dow is approaching being higher by 1%. We've added 479 points on the session. Want to thank you all for being with us on Trading 360. I'm Marley Caden. You can download our free Schwab Network app in the Apple App Store, and you can tune in 24/7 on schwabnetwork.com. Don't go anywhere. Fast Market is next.
Schwab, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Schwab Coaching is concepts brought to life in the real world.
Schwab Coaching is learning constantly.
It's relatable, it's practical,
clear, understandable,
and hopefully entertaining.
Take it for what it's worth, but I think it's absolutely world class.
Schwab Coaching is actionable, individualized, community, growth, and empowering.
It's really a human touch with your investing.
We have coaches who have been in the industry and around the industry for a long time.
So the nice thing about Schwab Coaching is that clients get access to 9 different sets of expertise.
We want to engage with you and chat on the shows we host. We want to engage with you outside of the classes we host.
A consolidation that could add to this trade. So we shall see.
We have different formats because people learn differently at different times.
If somebody's a real bookworm, we've got courses for you to learn from. They can dig in, go at their own pace.
We have webcasts running through YouTube all day, every trading day.
Ongoing 24, 25 times a year events that are making their way around the country.
So you get that opportunity to share experiences and knowledge with other traders.
They're kind of helping each other learn step by step along with the education that we provide them as well.
We're going to be able to help you regardless of where you are on that path of education.
It's really unique, not just that it exists, but that you can tap into 30 some hours worth of it each and every week. How incredible is that? And it's free.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Afternoon. Welcome to Fast Market right here on Schwab Network. I'm Nicole Petalides, filling in for my friend Diane King Hall. It's great to see all of you on this Friday. It's noontime right here on the floor of the New York Stock Exchange. We have a big show for you today. We'll start off with how markets are faring, and we are seeing some up arrows for the week. The NASDAQ and the S&P are to the downside, but a winning month. Still, August has been a nice up month overall, with the S&P right now down 1.2% for the week. Today, it's gaining 0.6%. 76.89 is the level there. The Dow Jones Industrial Average up 442 points at 53,201. The Nasdaq's gaining almost 150 points there at 29,363. That's 0.5%. And the small caps gaining, though the 10-year bond yield has been sneaking higher over the last few hours, and oil is still at an elevated level of over $86. Here's the roadmap of our show today. We'll get a look at example options trades for AMD as shares have fallen 9% this week. In fact, we'll have a bull-bear debate conversation. And the team at Likefolio will take a look at the latest sentiment data for Coinbase as Bitcoin continues to rally and break out following President Trump urging Congress to pass the Clarity Act in September. Later, we'll break down the recent action that we've been seeing in Intel, which is down 11% for this week. In the meantime here, what's the big picture we have? Tom White and in our Chicago studio, and Kevin Hanks. So I'm glad you're both here. We'll go over the trading action. It's wonderful to see you both. Let's start with you here, Tom. Some of your thoughts on the market and the big picture.
Yeah, a little bit of a relief rebound here today after mostly weakness throughout the week. And it's pretty surprising. I think it's interesting to see yields, that benchmark 10-year yield at 4.73% and trending higher today, but the equity market's pushing back against that narrative and moving up to the upside here, maybe going into the weekend with the hopes that we're going to get maybe a pullback in crude oil, maybe a pullback in yields. But the market's starting to get comfortable with these levels of the long-term bond yields and note yields at this point. And I think that's comforting, to say the least. Now, the NASDAQ 100 is still down over 2% so far this week. You mentioned the S&P 500 down 1.2%. So I think just trying to get their bearings at this point, ahead of the weekend and maybe push back against this downbeat narrative that we've had for most of the week. Now, I think some of the outliers that are creating those headwinds for the equities aren't going away. The higher crude oil prices, higher yields at this point. The dollar's pulling back once again, but kind of stabilizing a little bit. We've seen a push into gold. We've got Bitcoin that's rallying 6%. So I don't think the narrative that the headwinds that are out there, geopolitical tensions and those other asset classes, has gone away. I think that the market's just getting a little bit more comfortable with them. I would be surprised if we continue to move to the upside unless yields kind of pull back here later on in the session.
And we had a brief reaction to Secretary Scott Bessent's doubling down on the buybacks in September of the long-dated treasuries, gave a boost, but then now, well, you can see we've sort of back to where we started. Kevin, some of your thoughts?
I think when you look at today's rally, that was, spurred by pretty good news, and we're going to talk about some of that throughout the show. But as I watch, the noon hour in New York, we're starting to lose the macro here. Crude oil has now drifted from down about 0.5% to up on the day. Yields are back up to where they were. So we have to be careful here at these levels because the macro is starting to fail on us here. Now we're still up about 0.5% on the S&P, about 0.5% on the NASDAQ, but we're getting a little shaky as we get to midday. Now that can still reverse in either direction, as you know, but I would stay a little nimble here because the macro, except for the dollar, the US dollar is still lower, and that's what's fueling this rally in metals. But yields and crude oil have drifted a little bit to the other direction here, and that's worrisome, Nicole.
Yeah, indeed. I wanted to turn your attention over to Bitcoin. That's been a bright spot for the folks who love crypto. They see it up about 22% this week alone, and that's all about the Clarity Act and more. Tom, some of your thoughts on this breakout action we're seeing with Bitcoin at 77,260 today.
Yeah, that basically a 10-month bear market for Bitcoin reversed in a matter of days since about Wednesday on the announcement from Treasury Secretary Bessent at this point. But, we're back to levels that we last saw in mid-May at this point. And you mentioned the Clarity Act. The president basically having a meeting with some of the CEOs of the leading crypto firms this week, Coinbase, Kraken, Ripple, Chainlink, trying to get some fair version of this, Clarity Act through. And trying to make it bipartisan. And it feels like there's some short covering going on, probably in Bitcoin. That's probably led to some of the gains. But this is definitely a benefit for, this asset class moving forward if we get something on the books as far as Congress goes. And maybe tamping down some of the higher thoughts about this Clarity bill at this point. And that's going to be a positive for the sector. I would probably warn a little bit that, hey, maybe some of the short coverings lending some of the gains this week. So I'd be a little bit more careful. But I expect volatility to kind of pick up. But this is definitely a positive for the bulls.
Yeah, that short covering was prevalent for sure. We did see Coinbase, we didn't mention, which we're going to cover with Likefolio, up 26% this week. Kevin, your thoughts?
I think if you look at a longer term, like a 20-day chart of Bitcoin, it has basically flatlined, and it was going through a winter. And so what changed it? Wasn't technical analysis. It was a headline. It was a meeting at the White House and President Trump talking for passing of the Clarity Act. That news headline spurred what? Something that cryptocurrencies and Bitcoin need, and that is momentum. It caused momentum. You see the couple-day rally here on this. How long will it go? I have no idea. But if you look at a 20-day chart of Bitcoin, it was flat for the last 18 days, the last two higher on that news. So the momentum is certainly on the side of bulls. We'll see how long it lasts.
Yeah, I spoke with Adam Lynch yesterday of Charles Schwab. He thought it was very possible it could continue into the Clarity Act. Up next here, we have Broadcom on the move here with some big news and now some financing too. Let's break that down. Tom?
Yeah, I think if you take a look at it, the capital raised $60 billion, potentially going up to $100 billion on this in different tranches, supported by Apollo Global and Blackstone at this point. But this is kind of fitting in that narrative where everybody's trying to raise capital as they try to meet the supply-demand crunch that's been going on in AI chip financing here. One of the, caveats is the fact that Broadcom got hit pretty hard this week on the news that Google Alphabet's going to be using Marvell to help them build out their TPUs when they initially had some talks with Broadcom at this point. But the deals of the deal and the financing still trying to be ironed out at this point. $30 billion junior debt tranche might be added to this on top of the $60 to $70 billion that they're trying to guarantee. And this just goes into that narrative of all these companies in a rush to get these deals done at financing this AI infrastructure build out at this point. Broadcom working with the multitude of different firms on these specialty chips, right? Trying to take or dig into the lead in advanced AI chips that NVIDIA has at this point, whether it's on the TPU side, whether it's on the Amazon side with their Trainium chips also. But this is still going to be that, demand outstripping supply type of scenario. But it seems like the market's more comfortable with the amount of debt that these firms are raising to finance these deals.
All right, and I saw there was even talk it could go way higher. The $60 billion is the part that seems evident, but maybe even up to $100 billion. We'll have to wait and see on that. In the meantime, Kevin, your thoughts?
Tom went through all the details of this deal that they're raising money, but the most interesting trade of this week was when Google Alphabet, who has a long-term deal with Broadcom, struck up a deal with Marvell also, and Broadcom stock sold off. That is, I understand why Marvell rallied. It should have rallied because of a deal with Google Alphabet. But to sell Broadcom, it seems like the market got that dead wrong. And the stock is bouncing back a bit today. Why? Because there's plenty of business to go around. Google Alphabet had to make another deal because they're trying to get the supply that's clearly not there. So I think if you think that there might be winners and losers, possibly, but I think this is just the pie getting bigger. And even though you should have bought Marvell on that Google news, you should not have sold Broadcom. And I think that's what you're starting to see today, a little recovery in the name. But it's doing that on good news of raising more money. But yeah, selling off Broadcom because there's more business, not less, seems like a mistake to me.
All right, good point. And then last but not least, certainly on the 26th, we'll hear from NVIDIA. The earnings are due out next week. We always have bits and pieces of news as well. Tom, some of your thoughts here on NVIDIA. We talked a little bit about this earlier today as well, some of the analyst calls.
Yeah, it's going to impact NVIDIA, of course. It's going to impact the tech sector, and it's going to impact overall markets in general because NVIDIA is such a big component within the S&P 500 and the NASDAQ 100 and the Dow. So take that into consideration when you're going into these results. They're expecting revenue to double from a year ago period, EPS to basically climb from $1 in the same quarter a year ago to over $2 on EPS. So that's going to be scrutinized. And then you're going to start looking at the roadmaps for Blackwell and the Rubin chips. How it's doing on the build out of the CPU to keep the lines of AMD and Intel taking business away from those as they get into this new segment within chip making. The gross margin is still going to be above 75%. That's something you have to take into consideration. They're scrutinized probably maybe some clarity on that $500 billion AI infrastructure push that's being led by, these big money managers, Blackstone and BlackRock and Goldman Sachs and others. So there's going to be a lot to break down here. You look at the growth numbers that were 85% last quarter. If those beat again, remember, the last couple of quarters, NVIDIA blew out numbers, right? And then we're scratching our head why the stock was stuck in a range from, 190 to 210. We've finally broken out, but it's been weak so far this week. Down over 3% for this week. So, yeah, this is going to be a big report, and it's going to impact the markets, not only NVIDIA stock. So take that into consideration, but I expect some volatile moves.
Right, and this is after the big deal that NVIDIA and Jensen Huang made with all those institutional investors as well. Kevin, some of your thoughts on NVIDIA down 4%.
Well, NVIDIA is struggling. First, I want to say hello to the students at St. Louis University that are watching the show. Hello, girls. All right, that's my daughter who's watching the show with her roommates. Okay, now, NVIDIA. Next Wednesday is going to be an enormous day for the market. Why? We're going to get a ton of top-tier economic data, durable goods, the second look at GDP, personal income and outlays, and then in the afternoon, we're going to get NVIDIA's earnings. That's going to be an incredible day for the market. And then Marvell the next day. We're going to get so many answers from what NVIDIA's been doing, and so many stocks are going to be affected by NVIDIA's earnings. And not only that, think about any stock that might get mentioned in Jensen Huang's conference call. Those are the big things going on next week. Listen, trying to get a handle on what NVIDIA is going to come out with. Here's the biggest question. What don't we know yet? What's he going to say that we don't have a newsworthy of right now? That's what I want to know for next week. What's Jensen Huang going to say? Is he going to have like a Steve Jobs moment? Oh, one more thing. Is he going to announce new things? Listen, NVIDIA, that Tom and I have been pounding the table on for several weeks, is actually becoming a value play. The bar might be actually low in their earnings event. This could get real crazy next week, Nicole.
It really could. Great setup for next week, and we'll have a slew of names: NVIDIA and also Intuit, CrowdStrike, HPQ, Salesforce, just to name a few. At the same time, UBS put an 8,100 target on the S&P. I saw that a short time ago. Bull Bear is next, and these gentlemen will give their example trades for AMD as the chip maker has fallen 8% this week. One analyst is staying bullish on the stock. We'll dive into it next here on Fast Market.
Check your cable, check it twice. Camera angle acting nice. Brick by brick, the proof grows in with that Lego.
Good sir! You cannot call me like that! The hell?
Representative to America 250, and she joins me now. Madam Ambassador, welcome back to the show. What can you tell me about President Trump's lap of honor around the track? I think he's taking the beast, isn't he?
Well, good morning.
When the biggest name in AI reports its earnings. Joining us Wednesday, August 26th for NVIDIA's second quarter report.
Market on Close will give you 30 minutes of extended coverage to react live to the numbers that matter. You'll get instant feedback from the report, where the stock is headed, and what comes next in the AI trade, because where NVIDIA goes, so could the market.
Tune in to Market on Close for NVIDIA's earnings on Schwab Network. Have you ever watched an interview and thought, I wish they had 5 more minutes? Or, I want to know how they discovered that hidden gem? That's exactly where Market Matters comes in. I'm Marley Caden, and our podcast is slowing things down. We're going beyond the earnings to get to the heart of the people and companies driving the global economy. If you want the full story, not just the headlines, Market Matters is for you. Subscribe wherever you get your podcasts.
Welcome back to Fast Market right here on Schwab Network. Shares of AMD are a little changed in today's session, but have fallen 8% this week. BMO Capital came out today and initiated coverage on the stock with an outperform rating and a 550 price target, saying that AMD is on the verge of becoming a complete AI infrastructure provider. Let's welcome back the co-hosts, Tom White and Kevin Higgs. Want to get your thoughts here. Kevin, let's start with you. Your thoughts on AMD.
You know, you can make a case that AMD's stock action has been way better than NVIDIA's. I mean, I look at a year chart, it was $149 a year ago. So it's had a massive rally and a catch up in terms of valuation to NVIDIA. The data center revenue, 107% year over year. Now that's going to be 58% of their total revenue. This, what they're doing in terms of competing in GPUs while still taking massive amounts of market share in CPUs is going to be incredible. They're going to update their relationships. They're expanding addressable market. I think watch for that phrase throughout the next earnings week and the rest of this earnings season. Total addressable market that NVIDIA is talking about and AMD is going to talk about. They can talk about a path to $15 in earnings per share in 2027 and maybe up as much as $20 in earnings per share. So this is another company that's going to do incredible things in the next week. And make no mistake, it'll move on NVIDIA's move as well. So next Wednesday won't be just a big day for NVIDIA. AMD will move. Broadcom will move. A lot of stocks will move on that news, that big group that follows NVIDIA. So I expect a big week from AMD next week as well.
Yeah, that's a good point. And the high recently back in June was 584. This price target is 550. Tom, your thoughts here on AMD, please?
Yeah, Kevin mentioned the data center growth of over 107% last quarter. That was up from 57% the quarter before on a year-over-year basis. So that continues to grow and be the driver for the stock, which is up about 119% so far just this year. It's rolled over a little, down nearly 20% from those record highs that we saw just over a month ago. But if you look at the CPU market, right, Kevin mentioned that it's a big competitor to Intel. Intel's got the most market share, right? But it's down to about 67%, and AMD went up to above 30% in that x86 that they have in the CPU market for the first time ever, according to Mercury Research. So that's a benefit, right? They're taking market share in the CPUs, which are starting to explode right now as far as pricing and margin improvements. So that's a bonus. And then you look at the total addressable market for data centers. This is supposed to continue to accelerate throughout the next 3 to 4 years, throughout into the latter stages of 2030. We're talking trillions of dollars. So that's why maybe you look at the valuation on AMD on a forward basis. It's expensive compared to historicals, right? But maybe it should be. Are they growing into that multiple? And that's what investors are getting more comfortable with at this point. I mean, it's a high-priced stock. It had a parabolic move. You know, if you look at it compared to what NVIDIA does on their growth rate and their forward PE, which is, below 25 times at this point, NVIDIA is cheap compared to AMD. But how much, impact are they making in their Helios rack systems that are going to compete with NVIDIA? Are they going to take any market share away from them? NVIDIA, remember, had about 90% market share in the high-end data centers. Are they taking market share with their MI450 chips? That's going to be scrutinized on their next, earnings call at this point. The stock is expensive at this point, but it's hard to kind of get in front of a momentum trade like this, which AMD's been over the last 6 to 8 months.
Yeah, and this as the total addressable market continues to grow, as you both noted. Let's talk about how to trade this name, AMD. Kevin, please start us off.
Sure. So next week, NVIDIA's earnings are going to affect the market, and it'll affect AMD. So if you're bullish on NVIDIA, which I am, I think you have to be cognizant of the fact that AMD might rally with an NVIDIA rally. And so I looked at something very moderate risk. There's risk in every trade, but this is a more moderate risk. I went out 2 weeks to the September 11th expiration, and I bought the $4.95 call. Just, $20, what is it, about $25 higher than where it's trading right now. And then I sold next week's September 11th $4.95 call. So just a 2-week call calendar in AMD. It was trading about $8.90, trading about $9.25 now. So it's already rallied about 30 cents, Tom. This is one that, the implied volatility is going to be elevated for next week. So the price, remember, this is a 2-week call calendar, not a 1 week. So you'll get in a chance to extend duration and chip away at the debit, Tom. But I think if NVIDIA comes out with good earnings, and if NVIDIA rallies, and these are all ifs, AMD could rally as well, Tom.
Yep, let's break this one down. Gives you upside exposure here in AMD on Kevin's 2-week wide call calendar to the upside. So let's break it down. September 11th, weekly options that expire in 21 days. Buy the 495 call, sell that same 495 call in the August 28th weekly options that expire today, or in 7 days, excuse me. You're paying roughly about an $8.90 debit for it. Might be trading just a little bit higher, but the debit you pay is going to be a risk. So you've got a lot of risk on this, right? But you got a lot of potential reward on it if the stock trades at or near 495. I think one of the key components of these calendar spreads is that, yeah, you need it to get towards 890 or 495 for basically the max profitability, right? But you still got a nice wide range, maybe between 470 on the downside and 520 on the upside to be potentially profitable on this. If you look at just like a 1 week wide roll in the near term and at the money calls right now on maybe the 470 strike where the stock's currently trading here, that's above $11 on that 1 week wide roll. So Kevin said you can extend duration on this. As you get closer to expiration over the next 7 days, you can buy that short option back on the 495 call, roll it to another weekly series, collecting credits. That reduces risk, increases potential profitability on this. While this gives you upside exposure, what you don't want to happen, you don't want the stock to fall from here. That's going to lose profitability. And then also, if the stock goes up above maybe 525, that's where you start to lose profitability also on this one. But 2 week wide call calendar to the upside. You're paying a lot of debit for it, but that's your risk on it, so you know your risk defined on this position going into the next few weeks on this one. Kevin, I looked at something a little bit more passive where I can still be wrong but still be profitable on this type of trade. I went out to the September 18th monthly options here, Kev, so I've got some duration on this one. And one of the things I looked at, Kev, was on the charts, the 50-day simple moving average, which is the stock is now below about $510 on that 50-day moving average. So I looked at a strategy that says, hey, maybe that becomes an area of resistance like it has been over the last week or so. So I looked at an unbalanced call butterfly. We're actually taking a credit on this. So we're going to buy one of the September 18th monthly 490 calls. We're going to sell 2 of the 500 strike calls, and then we're going to buy 1 of the 540 strike calls. You're collecting a credit of roughly about $5. You probably collect about $5.60 right now on this. But if you collect a credit of $5, that's what you can make if the stock stays below 490. You just get to keep that credit that you collected, $500 per spread that you do. But then above that, if you go towards the 500 strike, that's at apex of profitability on that. So you actually make some money if the stock goes against you and goes up towards 500. Now, where's your break even? If you collect a $5 credit, it's around $515. That's above that 50-day simple moving average to the upside. That might be resistance here. But you do have a lot of risk on this type of trade, right? But that's all the way above 540. You max out on your losses of about $2,500 per spread. So, Kevin, you got a lot of risk on this one, but I've got a big cushion to the upside above that 50-day moving average to get to that 515 break even level.
Yeah, this spread is counterintuitive, right? Because it's a call butterfly that's actually bearish. But you can be profitable on the upside. You just don't want to go too far wide. Well, you're long a $10 call vertical and short a $40 call vertical. And there's the problem. That's why if you collect $5, if the $10 vertical makes $10, that's 15, but you can still lose 25 if it goes through that 540 strike. So you're susceptible to a big move on the upside. If the ideal situation, Nicole and Tom, you put it on for a credit, you take it off for a credit. And again, at $495, my spread and Tom's spread makes money.
Yep. And that break even about 9.5% above the current share price, that 515 break even. So you profit in 3 out of 4 scenarios. The stock goes lower, you keep the credit. Stock goes higher, that's where you max out on profitability near 500. You just want the stock to remain below 515 over the next 28 days on this one. So there you go, bull bear debate here in AMD. Nicole.
Excellent. Thank you both. Tom White, Kevin Hinks for those trades there. And folks, coming up next, it's time for Cash Tags. The team from Likefolio will join us with their latest sentiment data on Coinbase. As the rally in Bitcoin continues, Fast Market will be right back just after a quick break.
I'm Sam. New York Stock Exchange. When the market moves, we're on it, getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform.
My parents didn't really talk about money at all. In college, everybody around me had money. I didn't want anybody to find out that I wasn't middle class. I was using credit cards to do anything and everything. I ended up with $20,000 of credit card debt. That's when I kind of realized, like, all right, I have a money problem. This is about how my finances got wrecked and how I fixed it. And if I could do that, you can do it too.
No politics, no spin. Just the market from open to close and beyond. Streaming 24/7, any screen, anywhere at schwabnetwork.com.
When you invest, you are not wagering on an outcome and walking away with either a windfall or nothing. You are a participant in wealth creation. Our purpose is to help investors build and protect wealth over time, not to make financial security feel like Las Vegas. Owning beats hoping. Discipline beats speculation. And the long run belongs to those who invest in it.
Welcome back to Fast Market right here on Schwab Network. I'm Nicole Petalides alongside Tom White. Right now, we're looking here at Cash Tags, and we bring in Megan Brantley, VP of Research at Likefolio. We're diving into Coinbase, which has been breaking out, up over 25% this week, along with Bitcoin. It's great to see you, Megan. Some of your thoughts on the data. What have you been seeing when it comes to Coinbase, please?
Yeah, so whenever we look at Coinbase, as you mentioned, this is one that really trades nearly in lockstep with Bitcoin. And we saw a ton of federal catalysts come through this week, from a White House summit with a lot of the crypto leaders to Treasury announcements. And we see that driving some interest in Bitcoin at large, and that's helping to drive interest in Coinbase. And when we look at this, when we take a step back and we look at our demand data, you know, we've seen Coinbase really on a decline on a year-over-year basis. I think we have that demand down by about 45% year-over-year. This is not a surprise, as we've seen the price of Bitcoin start to fall. And so for us, when we see something like this, we definitely have some near-term catalysts that are driving Coinbase higher. But at a high level, this is something where Coinbase right now is moving alongside Bitcoin. This is a proxy play on Bitcoin, at least in how we're looking at things now. Coinbase is doing a better job of kind of diversifying its revenue base from not just Bitcoin trading into other things, like subscriptions and services and other cryptocurrencies. But this is still at large a crypto proxy play. And when Bitcoin does well, we tend to see other cryptocurrency names follow. Coinbase is doing a better job of capturing a larger piece of all of that pie. But at large, when we think about this name, we think about this as more of that kind of Bitcoin adjacent tangent play.
In that distribution of revenue by source for them, this looks like 48% of revenue is subscriptions and services. Is that the key for this stock moving forward, according to your data? Just because I think more than anything, it has that high correlation with the price of Bitcoin at this point. But there's other avenues for traders out there to trade spot Bitcoin now, and that's continuing to grow at this point. So is that going to be their main area of, revenue generation? Because when competition comes in, that starts to hurt the amount of revenue that they're going to collect from those other revenue sources, which is crypto trading and Bitcoin spot trading.
Yeah, you're exactly right. I think that this is critical, and I think that this is kind of the bullish case for Coinbase, and this helps provide Coinbase some stability in times whenever we see the price of Bitcoin fall dramatically as we have over the last year. And so, one thing too that they're doing is getting into prediction markets. We see this increasingly across the board, and the leadership has talked about wanting to be an everything exchange, and that's certainly a step. But right now, it's just such a small percentage of total revenue. We really see trading fees at large still drive half of the revenue, whether it's Bitcoin or other cryptocurrency. So this is an area where Coinbase is a massive leader. It is, I think it commands 10% of total cryptocurrency trading fees. You'll have to, maybe Bitcoin fees, I need to check that, but it is certainly the mindshare leader when it comes to kind of trading those cryptocurrencies, but it's not insulated from competition, as you mentioned, and so that diversification is really important.
And we know that the president met with some of the crypto leaders, is moving forward with the Clarity Act, trying to have that on the agenda in Congress on September 15th, even naming some of the other cryptocurrencies, which now we know Coinbase as a heavy revenue source from the others, like Hype. How much do you think, when we look at something like this and you talk about demand down year over year 45%, maybe with the interest and the Clarity Act, is that something that we may see more interest for Bitcoin? It's hard to say, right?
It is. It's really tough to say, and that's something that we'll be watching. I think right now it's certainly dominating the news cycles and the headlines and starting to get, regular, normies, as Landon likes to say, interested in Bitcoin again and interested in cryptocurrency at large. And if we continue to see these federal catalysts, and if news continues to trend positively for Bitcoin at large, we expect that to benefit Coinbase long term. For our data we're watching, this has been a very near-term event, and so we're trying to understand how actual Coinbase users will respond, but it's obviously, as the price of Bitcoin goes up, this is a good thing for Coinbase. So not surprised to see the jump here near term, and certainly there are bullish catalysts that we can see very shortly or very nearly ahead, looking ahead.
Megan, it was in a bear market basically for the last 10 months prior to this week, as far as, and that's just Bitcoin in general, right? Are you guys seeing any trends and data on the adoption from the everyday investor? Because it seems like it's sputtered out over the last 10 months as Bitcoin's fallen. So that sentiment, or maybe, I guess the positive sentiment out there, maybe from social media and what investors are saying, only turns when Bitcoin starts to move higher. Well, they'll go back into it for a little while. But what's your overall take on your data that says crypto adoption continues to grow, and that's going to be a benefit for Bitcoin and that, in turn, Coinbase moving forward?
Yeah, I think sentiment has certainly been on a slide. This has been a nice little near-term boost, but in general, we've seen interest in cryptocurrency lessen. We've seen more consumers who are talking about AI, who are talking about, just for instance, I know on Google Trends that Google Trends interest in peptides overtook crypto. I think it was last month. And so just as a high level theme, crypto has kind of fallen into the background, and now we're starting to see it break through, but we'll have to wait to see if that actually translates into actions from regular consumers at a high scale. So far in our data, it hasn't, but certainly positive to start to see the light being shined and crypto to start to come a little bit more to the forefront, especially if you are a long-term believer in cryptocurrency and Bitcoin.
Thank you, Megan, for all the data and also, really clarifying the correlation between Coinbase and Bitcoin as we go forward. As you mentioned, this could all be a catalyst in Washington. We'll have to wait and see. Megan Brantley, thank you, VP of Research at Likefolio. And we've seen some demand, certainly this week, as it's broken out. Kevin Hanks is back in here for the conversation. Tom, we just had a great conversation as well. Some of your thoughts, Tom, first on the data that we just went over.
Yeah, I think it's interesting. We always talk about correlations when we talk about how a stock reacts based on, some other asset class. And this is right up the alley of what we've seen as far as Coinbase because the correlation is so high. You mentioned the stock's up 26% this week. I still attribute a lot of that, to the Clarity Act, but then also short covering because there's massive short open interest, and not only in Coinbase, but also in Bitcoin and cryptocurrency in general, just due to that, 10-month long bear market that we've been in for crypto. Is this Clarity Act the catalyst to get this back at the forefront of headlines? Because I think that's part of, crypto trading, is that if it's in the headlines, you have to, think about it that way. So I think we're going to get to Kevin's trade here, but I think I'm going to have to go through it. I think we might have some technical issues, but let's go ahead and break down Kevin's example trade here. So the stock has moved up pretty significantly this week. Volatility has expanded, even though the stock has moved higher, just because we've seen outsized moves in this one. The current IV percentile, about 41%. So Kevin looked at an example trade here out in the August 28th weekly cycle. So this is just 7-day trade here. We're going to look at a back ratio. It's basically a 1/2 call spread here, where Kevin's going to sell one of the August 28th 170 strike call. That's deep in the money. And then he's going to buy two of the August 28th weekly 190 strike calls. So there's that 1/2 back ratio spread. You're going to collect a credit on this spread of about $4. It's trading currently over $5 right now, but we've got it in here at $4. So we'll go with that. Now, what does this mean? Well, you can see here from the risk profile, the 190 strike where you're long two options is where you do not want the stock to stay. You don't want it to go to 190 or remain near these levels at all. What are your break evens on this? 174 on the downside. So you expect you need the stock to go below 174. And what happens there? Well, you get to keep that $4 credit that you collected below 174 break even. Now, on the upside, I mentioned you want some volatility in this. On the upside, your break even is $206 to the upside. And then you have infinite gains over there, remember? So this strategy is basically a short call vertical. You're short the 170, long the 190 with an extra 190 call here. So anything that goes above 206 on the upside is going to be infinite gains to the upside. So what this strategy does in essence is says that we've rallied up towards 190, but we're not going to stay there. You want it to go either below 174 break even over the next 7 days, or you want it to go above 206. If this momentum continues on a percentage move, you need a big move to the to get above that 206. But that $4 credit that you collect on a strategy like this is the key. If the stock goes and trends lower, back below 174, you get to keep that. Below 170 is where you can make that $400. So, Kevin, we got you back here. I kind of walked through your 1/2 back ratio spread. Go ahead and add anything you need on this one.
So this is a spread that is playing for a big move. It loses money at the $190 mark. That's where, like, just being along a straddle, Tom, you want it as far away from 190 as possible. It's very short term, but it breaks even at 174. It breaks even higher. But the advantage is the profits on the upside are infinite. That's the difference between this spread and others, Tom. It's an infinite upside, but you're doing it for a credit. So if it moves on the downside below 174, you just keep a portion or all of that credit.
Yep, and at that 190 strike, as Kevin mentioned, we wanted to trade away from there. You got about $1,600 in risk if it pins that 190 strike. So need a move type of strategy here on the SPAC ratio, Nicole.
Yeah, big one at that. Thank you, Tom White. Kevin Hinks, a good look there at that trade. A team effort, no doubt, here on Fast Market. Folks, we want you to keep it right here because coming up next is the breakdown. We'll be looking at Intel. Shares have slumped 12% this week. Some of the details and insight next on Fast Market. We'll be right back.
It's the Schwab Network.
Tune in 24 hours a day, 7 days a week on schwabnetwork.com
and on all your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free.
Hey, Bob.
Hey, Andrew.
Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable.
Wait, had a stroke?
Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Jim's my financial consultant. I programmed met 20 years ago.
Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
Hi, I'm Alex.
I'm Jane. And I'm his mom.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform.
Hey, Bob.
Hey, Andrew.
Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable.
Wait, had a stroke?
Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Jim's my financial consultant. I programmed met 20 years ago.
Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform.
Welcome back to Fast Market right here on Schwab Network. I'm Nicole Penalese. We're live on the floor of the New York Stock Exchange. Well, stocks have made a boost throughout the day. We are seeing the Dow up about 407 points, but still a losing week on Wall Street, though August has been a good one. But we're getting ready for September, and that seasonally can be a tough month. Right now, you're seeing the NASDAQ up 113 points, up 0.4% at 29,326. The S&P sitting at 7681. We continue to look at some of the big movers. Fast market is here, and we have our attention now to Intel. Now, Intel has been under some pressure this week. It's down about 12% this week. And I'm bringing back in here the co-hosts of the show, Tom White and Kevin Hicks, to take a look at Intel. At least one of the analysts thought if Taiwan Semi raised prices, that would give some opportunity to Intel. But it has been under pressure. Tom, some of your thoughts.
Yeah, you mentioned it's down 12% this week. It's down about 36%, nearly 37% from its all-time highs that we hit just over a month ago. So, yeah, you know, some pain this week, but it's been painful trade for investors over the past, 30 or 40 days. But we did have that parabolic move. I mean, the stock's still up, 144% so far this year. Valuation's a concern for this company, and I think that's why you're seeing the stock pull back pretty significantly. I mentioned earlier when we talked to AMD that they're losing some of the market share in the CPU space to AMD, but at the same time, now you got NVIDIA that's coming into the space also. But the other portions of their business are starting to pick up the slack, especially in the PC, the AI PC segment. They're actually continuing to grow there on a sequential basis on a quarter-by-quarter front here. So you have to take that into consideration. I think just the pie has grown so much. That's why you're seeing these parabolic moves in AMD and Intel. And everybody was focused on this GPUs prior, in 2023, 2024, even in the first parts of 2025. But now it's switched to CPUs. This AI data center build-out, the amount of CPUs needed was, I think, underestimated. But you've seen that reaction in AMD and Intel recently. That's kind of reflective of the amount of build-out that these companies have and the backlogs that they're getting. Their pricing's better, so their margins are starting to improve here. And I think one of the key things that you have to look at is the foundry side of their business. How quickly are they going to be able to ramp that up to meet the amount of supply or demand that's out there, because supply-demand is still a concern for this company.
Something you both talk about, that there is a lot of demand out there. And Kevin, your thoughts here on Intel?
The roller coaster ride of Intel over the last years, from a company that completely dominated, like Google search market share in CPUs, to all of a sudden AMD is competing with them. They make a series of missteps. They replace their CEO, which some of the Trump administration is much more in favor of than the Trump administration. NVIDIA make big investments in Intel. They start to get the momentum back. The stock goes to parabolic highs. What stops that momentum? Well, part of it might be their stock offering to raise at first $15 billion, then up to $20 billion at $95. The stock's now below that price. So they still have a lot to prove and kind of a show me phase. They're healthier than they were before, but raising money at these highs really, I thought took some of the momentum out of this name. They've got to get that back. Like Tom mentioned earlier in the show, they're still dominant in CPUs in terms of market share, but there's a lot of people, AMD we know, and now NVIDIA getting into the CPU business. So there's competitive threats out there. Nicole?
Yeah, and as you noted, a choppy trade. It's been somewhat of a white-knuckle ride along the way, but it still remains very much a winner over 1 year when it's up 282%. Tom, you have an example trade. We would like to see it, please.
Yeah, I think if you take a look at their AI, data center business that grew 70% last quarter, that's a bright spot for this company moving forward. Highest ramp that they've seen in their Xeon 6 chip that just came out, as I mentioned, for those AI PCs. So that's going to be a benefit for them moving forward. I mentioned the stock has pulled back pretty significantly. I mean, you can buy the shares. You're buying them at a 37% discount to where the stock was trading just over a month ago. But I looked at a strategy that gives me the opportunity to profit if the stock goes higher or if I'm willing to, buy the shares if the stock goes lower, but you're buying it at a discount to where the shares are currently trading at this point. So I looked at a cash secured put, and I went out to the September 11th weekly cycle. So 21 days to expiration on this. I just sold the 85 strike put. You're going to collect a credit of roughly about $2.80 on that put. That's what you can make, $280 per put that you sell on this. Now, if the stock goes below 85, where do you buy the shares if you get assigned on those short puts, right? Well, you buy you buy the shares at 85 minus the 280 you collected. So your break even on this one down at 82.20 to the downside. So you've got a big cushion to the downside. Now, this is one of those strategies you've got to be comfortable owning the shares. You've got over $8,200 in risk, right? That's if the stock would somehow go to zero. So keep that in mind. But it's a twofold type of position where, hey, the stock's pulled back, I'll sell a put with the expectations that I sell it for 280, I just get to keep that credit, it expires worthless, the stock stays above 85. Or, hey, if the stock falls below 85, I'm willing to buy the shares at 82.20 at a steep discount to where they're currently trading. So it's capital intensive. You could put a bid in on this stock at 82.20 and maybe never get filled, right? Or maybe you'll have that in there for a while before it falls there, if it ever does, right? So this allows you to get in the stock at a lower price entry point, and if it doesn't go below 85, you just get to keep that credit you collect. Kevin, your thoughts here on the cash secured put that capital intensive?
Cash secured put is an interesting tool that a lot of traders use to just do what you just said, Tom. Buy the dip and get paid while you wait to buy the dip. This stock is already sold off. Could it sell off more? Of course it can, right? Just look at the one-year chart. But if you're making an investment, like I said, 82.20 is where you'd buy the stock, not $85. And then the risk is down to zero. But a stock under $100, that risk is probably manageable. But like I said, it's got the same profit graph as a covered call strategy. And so you're doing it very similar to that. The risk is about the same, Tom. So a great way to sell a high probability out of the money put. And if it gets down there, you buy the stock at a lowered price.
Yeah, that break even from the current $90 a share level, about 8.6% below that. That's where you'd be buying the shares. So there's that discount that we talk about. And the probability of finishing out of the money on that 85 strike, about 63%. So not that great, but at the same time, you still have that big cushion to the downside to that break even of over 8% on this one. And I think one of the keys is on this type of strategy, Nicole, is when you look at cash secured puts, is you got to be comfortable owning the shares. But this could be one of those repetitive type strategies that you do on a week-to-week or month-to-month basis. You just pick a level where you think you'd be comfortable owning the shares on a trade like this, because you do have a lot of risk down to zero.
All right, understood. Excellent trades and analysis as always, Tom White and Kevin Hinks. And thanks for having me on your show with you. It's been a pleasure. That will do it for us here on Fast Market. So glad you're with us every single day here on Schwab Network. And coming up next, keep it right here, because Next Gen Investing is next.
Live data and market-moving analysis. Schwab Network connects the headlines to the why in real time. Watch free 24/7 at schwabnetwork.com.
So what is unique about Schwab Coaching is the community.
There's a lot of energy, like-minded people are learning with you.
You can just see and feel all the excitement around getting to learn a new topic.
Some of you want to get everything face-to-face with you and 400 or 500 of your closest friends.
Some clients like to be in the privacy of their own home on an online workshop, but still having that live interaction with the coach.
As I'm talking, questions are coming in from that live audience, and they help me fill in those gaps as an educator.
People learn differently, but all those ways we actually teach it all come back to the point of making a difference and helping you make progress.
And so that means not just giving you theory, it means giving you the practical implementation using our platforms.
So we want it to be fun, we want it to be informative, and most of all, we want you to walk away with a skill set and independently be successful in achieving your goals.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, and trusted financial journalists, streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com. Real-time access, data-driven analysis from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at SchwabNetwork.com.
Mom, when my grandparents moved here, did they know what our family would become?
I don't even know if they could envision it. To leave everything behind, literally come across the entire world. I think that we totally met what their wishes were. Schwab has been with us for almost 25 years through purchasing up houses, opening up our business, having children. They've always been there for us.
I want to invest with a company that can help me give my family a happy financial future.
Welcome to Next Gen Investing and happy Friday. I'm Jenny Horn alongside Alex Coffey. We check out on markets though, pacing to at least erase some of their losses week to date in today's session with some strength across all four of our major averages. S&P's up 0.5%. We're also seeing the NASDAQ 100 up about 0.4%, while the Dow is also climbing pretty substantially here. And that actually is only down about 1% this week, but still higher, by about 0.8% today. We're also seeing the Russell 2000 up around 0.75%. And so you look back at the week that was, we're pacing to close out all four of our averages lower this week. Most substantial losses have been in the NASDAQ, which is now still down about 2.4%. So a different type of week after we've seen, I believe it was the S&P had 4 green weeks. Now we're rewriting that trend a bit here, of course, with this week-to-date performance.
Yeah, I think the same story remains intact for the S&P 500, which is that you have sort of two forces within this market. You've really seen this since, late April, early May, where there's a rotational element to the selling and to the buying, where it's almost like there's not new money coming into play. It's just the same sort of repositioning over and over. And it's like some days the AI trade leads, some days it lags. And today is one of those examples of everything else kind of working. Financials were out in front earlier. Healthcare was leading. And so
the NASDAQ to me has been more interesting. And the reason I say that is because, well, one, that's been the more volatile of the marketplace, but it's also the one that's a little bit more tied to these growth-centric, next-gen type industries. And I think something important happened today, Jenny, which is the market was under pressure this morning. It's the final trading day of the week. The NASDAQ has opened higher and sold off a lot of days in a row, it seems like. And it caught a bid intraday, and it's up right now. If we're able to close green today in the NASDAQ, I think psychologically it will do a lot to repair some sentiment. Look, we still got 3 hours left in the session. Anything can happen. But I think an important test was passed. They just got to make sure they keep passing it until the end of the day.
It's true, and of course we do still have a lot coming in next week, even specifically next week. We have a ton of these big names reporting, NVIDIA being one of these standouts reporting Wednesday after the closing bell, as well as Jackson Hole. And so some critically watched items as far as the Fed's expectations. But of course, throughout the next hour, we'll focus more on the stock movers. We will kick off our discussion with a look at some strength in two retailers today moving higher after their earnings. BJ's Wholesale as well as Ross, both names now up just around 5%, 5.7% gain for Ross and about a 5% gain for BJ's Wholesale. Now, Strategy also is continuing to rip here, and as well as other Bitcoin-linked equities that are continuing to see this strength as Bitcoin overall has helped to lift Strategy's value of its massive crypto holdings, so up 7% here. And Teradyne under pressure after Baird did downgrade the shares, saying the recent rally may have gotten ahead of the company's near-term catalyst, and we're pulling back modestly for a name that has been volatile, to put it lightly. I mean, we're still up by, roughly 92% this year. Well, actually contracting over 11% just this week. But to dive into our first mover today, that being Ross Stores, which is proving once again that the value trade is still winning. The off-price retailer delivered another standout quarter with comparable sales that were up by about 10%, driven by primarily by customer traffic, marking the second straight quarter of double-digit comp growth. Now, management did say that gains came from new customers, returning shoppers, and existing customers that are visiting more often and spending more. The company also raised its guidance, now calling for third quarter comparables right now to improve, growth of around 6 to 7%, while key categories like home and beauty did remain relatively strong. And so there are a few caveats. We did see earnings got a boost from about a $253 million tariff refund, which was worth roughly 60 cents a share. And so management did warn that year-over-year comparisons will get much tougher in the back half of this year. But still, even excluding that one-time benefit, margins did improve meaningfully. And so bottom line, the underlying trends do remain relatively strong. And for now, the bullish case appears to be at least winning today, up about 5 3/4% here, Alex.
Yeah, I mean, they've had a big strategy of sort of moving through seasonal trends a little bit quicker, so that when it's time to get the back to school, or it's winter time or summer, that they're ready for those consumers. But they've also improved their brand mix a lot. That was a big part of their strategy the last couple of years, and it seems to be paying off. A huge reason their comp sales growth was what it was is that they're getting new consumers, and they're also getting those who are already consumers to come back and spend more and do it more frequently. All in all, this is a company that's doing quite well. Analysts reacting pretty positively as well to this. I thought Morgan Stanley and Evercore's analysts did a good job of highlighting some of the things that were working, both of which were encouraged by the results. Evercore pointed to the broad-based top-line strength and a path to accelerating comp sales, where Morgan Stanley highlighted impressive margin expansion through some of those improved execution on these new kind of changing plans that they've implemented. Impressive move, and this is an example of looking beyond tech. There are things that are working beyond tech, and this is an example of them.
It is, and it definitely does continue to cement this theme where consumers, yes, are being more mindful with their dollars, but still spending, and that's a narrative we've discussed now for several straight quarters with these retail earnings. But our next mover today fits that same sort of broader discretionary category, and it's BJ's Wholesale, also moving higher after a strong second quarter that topped expectations. Revenue rose 16% from a year ago on earnings per share that also climbed another 19%. Comparable club sales jumped though nearly 12%, although that figure was closer to roughly 3% when excluding gasoline. The company did post its 18th straight quarter of traffic growth and its 15th consecutive quarter of market share gains. Membership reached a record 8.5 million, and membership fee income rose nearly 10% and digitally enabled sales surged a whopping 30%. But perhaps the most significant was management raising its full-year earnings outlook, citing strong sales trends and profitability. While some of the headline growth was boosted by higher gasoline sales, the Street appears more focused on the company's accelerating traffic and growing membership base, with, again, some solid comparables to continue to cement that. Up about 5% today. BJ's Wholesale has seen also some resiliency. We're only up about 6.6% this year and rising this week. But I mean, we have been fairly stuck in this recent range and are still actually lower on a 52-week basis.
Yeah, this is a company that, is directly competing with probably more nationwide brands that we're familiar, like Costco or Sam's Club, which of course is under the Walmart umbrella. But it has a little bit more of a East Coast exposure as opposed to nationwide. Now, they have expanded out. They've got, I think stores in Texas and Indiana now, but for the most part, think East Coast warehouse membership style. Your Costco, your Sam's Club. But we've talked about these in the past. When you have a little bit more of a choosy consumer that wants to feel like they're getting value for their dollar, especially the lower end of that K, these type of alternative ways to shop are a little bit more value oriented, and also with what's happened with the price of crude oil and what that's meant for gasoline, these warehouse clubs and the kind of discounted options to fill up the gas tank, huge boon for these companies. And example here for this, but you look at the reaction from analysts. I saw D.A. Davidson buy, William Blair outperform, Citigroup buy. It's still a part of the market that has a lot of love from the street and a lot of technical repairing from this particular move today. This is a stock that's still down about 10% over the last 52 weeks. It's had a nice 3-year run. It's pretty flat over the last 6 months, but it's back above the 200-day moving average. It's back above its 50-day moving average, and it has today to thank for that.
Yeah, it does have today to thank for that. And so a good point. At least today, seeing some favorability and, like you said, breaking above these key moving averages, hopefully signaling some further upside for earning that has been relatively just stuck as of late, but not stuck today, of course, up 5%. Now, coming up next, though, on today's show, we did just break down all of the various earnings and fundamentals driving the moves higher today in Ross Stores and BJ's Wholesale. So after the break, we'll continue that discussion by diving deeper into the charts with our chart master, Rick Ducat. Next Gen Investing will be right back.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Schwab Network has you covered when the biggest name in AI reports its earnings. Join us Wednesday, August 26th for NVIDIA's second quarter report.
Market on Close will give you 30 minutes of extended coverage to react live to the numbers that matter. You'll get instant feedback from the report, where the stock is headed, and what comes next in the AI trade, because where NVIDIA goes, so could the market.
Tune into Market on Close for NVIDIA's earnings on Schwab Network.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Welcome back to Next Gen Investing. It's now time for the Chart Master, and today we are looking at two winning retailers after their second quarter reports, Ross Stores as well as BJ Wholesale. So joining us is Rick Ducat, of course, our Chart Master, here to help us make sense of all of the various moves we've seen in retail, because what has been working, it seems like consistently, is everything tied to off-price and more of this discount type appeal. And so that's really the bread and butter of Ross Stores, which is now up about 5.8% here.
Yeah, and we have more to look forward to. Dollar Tree and Dollar General earnings come up next week as well. So when we think about Ross Stores, what happened recently was we hit our all-time highs of 257. We topped out around that area twice. Then we had a bit of a decline heading into earnings. We bottomed out around here previously. Then we breached that level near 232 yesterday. Now we have had a sharp resurgence above our downward sloping trend line here. So one upside area to watch now could be 247. That was a brief high point that we saw during our decline. If we were to, kind of collapse and start moving lower, low point here near 218 and a repeated floor here near 207 stand out as possible areas of interest. So next, our moving averages that we follow, a bit of a mixed picture here because our 5-day EMA, our short-term exponential moving average representing 1 week, had slipped below the 21-day EMA. The 21-day EMA in teal, representing 1 month, now comes in at 241.55. Prices hanging on above that one. So if we do hold on, you could expect that 5-day EMA to catch up relatively quickly here. But for now, the 21-day monthly is a supportive area that the bulls would want to hold on to as we head into the close of this trading week. RSI, our measure of momentum, showed that we had a little tiny bit of bearish divergence there before earnings. As I often say, this is not necessarily indicative of a pending collapse, just shows the pace of the gains is slowing down, but we did have some give back heading into earnings. Now we are seeing a bullish move from two different perspectives here. One is that the downward sloping trend line has been broken. Two is that we have crossed above the 50 midline once more here. So more doubly bullish from the perspective of this momentum indicator.
Okay, yeah, and definitely helping to see a pretty decent, of course, week and a decent really year for a company that has been in a very challenging still broader retail environment, figuring out what was resonating, what is not so much resonating currently. But all that to be said, as we do think about trading Ross here for example purposes, Alex, I mean, this is to be like a true discount retailer, and that's been a beneficial trade, and so perhaps leaning into just more of the same.
Yeah, improving their brand mix a little bit, some little bit higher quality brands, maybe getting into that mix, bringing in some new shoppers. But nonetheless, it's another example of a stock making a big move. And we looked at this from an example standpoint of just holding on to that big earnings reaction. So it's a short put vertical below the market, neutral to bullish in its construction, risk defined most importantly. Going out a little bit in time, about a month from now, goes out to September 25th. It's a weekly cycle. The reason I looked at a weekly cycle for this example is the monthly cycles in some of these names that are a little bit less liquid just have $10 wide strikes, or in other cases even wider than that. And so by going to weeklies, I was able to get $5 wide strikes, make it a little bit more, smaller trade in terms of the risk involved. But say you're able to collect $1.25. Your max profit would be $125 on a max loss of $375, and your break even $228.75. So below some of those moving averages, below some of those former resistance levels, now support levels. Looking for a neutral to bullish trade over the next month in this name in Ross Stores, hoping it holds on to its earnings pop.
Yeah, and hopefully we continue to see a lot of these discounters benefit from their earnings. As Rick did mention, we still have some of the true dollar store or dollar-ish store names reporting next week. And so now shifting gears into BJ's Wholesale, which I will say has underperformed at least some of the discount strength we've seen this year because this is more of that club membership type of setting. But walk us through what you see here, because I was looking at this chart and I know that we've made a pretty substantial spike. We've pulled back. And so today's move actually not necessarily even indicative of the volatility of this year.
Yeah, so what we had, kind of a similar situation in some ways here. We had a notable high that we formed a few weeks before earnings here, but in this case it was around 100. We had a notable drop off, and here we filled the gap that formed around the 88, 89 level. then earnings have given us a sharp push to the upside that broke above this downward sloping trend line here in white. So another breakout here for this more wholesale club type name, as you said. So now we've topped out roughly around 96, 95 or so. The next highs, the old peaks that we mentioned earlier near 100 stand out as the mark to beat. If we were to move lower, the gap began around 92. So that would be an area worth keeping track of here. As I often say, a common piece of trading acumen is that gaps can often be filled because they represent an area where we had a significant fundamental change behind the stock price. So they can be worth watching. They can often be a place the traders look for support after a big breakout to the upside. We do often see a pullback to that level. Not saying it's going to happen, of course, just saying it's a common situation to be on the lookout for. Our moving averages, in this case, come together between about 93 to 94 or so. The long-term 251-day EMA comes in at 94.28 in orange there. So this is the longest term and thus the most significant. So if we were to get a pullback there, it lines up roughly with our old trend line as well. So we have a bit of a confluence to keep track of there that would stand out as even more emphasis on that region near about 94 as a supportive area. Meanwhile, RSI shows a matching breakout along with price, similar to our last stock here. Breakout from the trend line and breakout above the 50 midline are more of a interesting type of setup here if you have a bullish perspective. Another piece of information that would be more notable is we're also breaking above our previous relative highs, which is what you would want to see if you were looking for a bullish setup.
Okay, yeah, and so hopefully, again, this more bullish trend can sort of continue to normalize and stabilize from here, but really appreciate it to Rick Ducat for bringing all of the technical setup today and two of our post-earnings retail moves. And so as we assess now BJ's, for example, purposes, Alex, walk us through your thinking here.
Yeah, if you think this is going to be some sort of a breakout, maybe we get back to those more recent highs. That's sort of in the $100 per share range. Only monthly cycles available. Of course, we're at a monthly expiration today, so your shortest dated options would go out to September. Then, of course, beyond that would be October. I looked at a traditional month-over-month call calendar spread here, targeting that $100 level. I'm looking to spend $1 debit on this. It means your max loss would be $100. If volatility expands, this would help this trade, and also a move towards 100 per share would help expand this trade as well. So it's a trade that's going to be a little bit slower moving, but you can even see this purple line, which represents how this would react today, a little bit smoother, and if it moves towards 100, it can still be profitable, even potentially before those expirations, which are about a month out from now.
Yeah, and so definitely encouraging way to, of course, close out this week that has been very much retail dominant as far as earnings were concerned. But we will leave it there for Chartmaster today. Now, coming up next, we'll dive into all of the volatility that has been to the upside this week in Bitcoin, as well as some of these Bitcoin-linked names like Strategy, of course, one of the largest corporate holdings of broader Bitcoin. So we'll discuss all of the recent move in the 34% spike from Bitcoin's lows back in July up next.
Earnings breakdowns, and hot takes that teach you about stocks and markets. Follow me on X at npetalides and connect with me, Nicole Petalides, on LinkedIn, Facebook, and Instagram.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Have you ever watched an interview and thought, I wish they had 5 more minutes, or I want to know how they discovered that hidden gem? That's exactly where Market Matters comes in. I'm Marley Caden, and our podcast is slowing things down. We're going beyond the earnings to get to the heart of the people and companies driving the global economy. If you want the full story, not just the headlines, Market Matters is for you. Subscribe wherever you get your podcasts.
Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
Hey, Bob.
Hey, Andrew.
Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable.
Wait, I had a stroke?
Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Jim, my financial consultant. I programmed 20 years ago.
Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
Welcome back to Next Gen Investing. Now, strategy shares are surging once again as Bitcoin's rally continues. The stock's near 30% run this week comes alongside Bitcoin posting its best week in more than 2 years. Strategy remains one of the biggest corporate Bitcoin holders in the world, owning more than 840,000 Bitcoin. And with the cryptocurrency's recent surge, the value of those holdings has now moved back above the company's purchase price, putting its massive Bitcoin bet back in the green. But now to talk more about, of course, the move in strategy as well as just the broader crypto space, we're joined by Sam Callahan, Director of Bitcoin Strategy at right now. So as far as what we're seeing, as far as just overall assessment of Bitcoin and, of course, the momentum that we've seen come back into play this week, I mean, how are you assessing the appetite for risk assets as well as just the way some of these names like strategy, of course, have benefited?
Yeah, and thanks for having me back on. It's been a volatile week, but everyone's celebrating this time as volatility has returned back to the upside. And I think this is related to what's occurred at the Treasury over the last week when they're doubling the amount of share buybacks. And really what this points to is the lack of sustainability of the fiscal outlook. And the currency debasement trade was really popular earlier this year, and then AI kind of took some of the spotlight away from that. So Bitcoin and gold became out of favor. But the important point to make is that it wasn't a trade. This debasement was structural, meaning that it's related to the fact that we have $40 trillion of debt. They can't afford to have the long end of the yield curve rise because interest expense will explode. Interest expense is already the third line item this year. Fiscal deficits are on track to exceed last year. It's supposed to be $2.1 trillion. And investors are starting to ask questions. And they're looking at alternatives and hard assets because when they come out and say, hey, we're going to go to Treasury buybacks, really what they're saying is we're going to sacrifice the currency. And you saw that in the dollar move in response to that news. And you saw that with the moves of Bitcoin and gold. So people are returning back to hard assets that will benefit from an environment of currency debasement.
Yeah, I think that's kind of the long-term shift, right? That's the big picture story. But from a trading story, you know, kind of the day-to-day, watching Bitcoin, you know, sort of a bystander, someone off to the side, as opposed to someone like yourself who's maybe in this business and is building a company around it. This has always seemed like an asset that the upside volatility like feeds on itself, and it becomes a part of the discussion, and then it feeds on itself more. It's like a true FOMO asset. And I wonder how much the fact that we've seen volatility really come down in your more traditional financial risk assets like equities has helped drive activity back towards crypto at the same time that some of these big picture debasement sort of anti-dollar and fiat currency trades are working as well.
Yeah, I mean, I think it points to the fact that Bitcoin is actually in a period where it had very low volatility compared to its historical volatility. So in very much, it was like a coiled spring, and it was kind of waiting for a catalyst. And you saw that with the news of Bessent coming out this week. But it was really, there was a lot of apathy, sentiment was low, and it was kind of ready to explode one way or the other. And so we saw it go to the upside here. But, Bitcoin's volatility is part of what makes it attractive for investors. It's not necessarily a bad thing. It's just about managing properly with position sizing. But the volatility is brings eyeballs, brings traders into the mix. Bitcoin crossed a lot of key technical levels, like its simple day, 200-day weekly moving average. It crossed that. That'll get traders involved. As it gains momentum, that'll bring other traders involved as well. And it kind of starts to feed on itself, right? And then, like I said before, the long-term value proposition has never been stronger when you look out at, hey, how do I diversify against some of these fiat currency risks compared to, say, equities or bonds? How does it fit into a portfolio? You got the traders getting into the mix. Some of the long-term value investors will get into the mix here as they see it down, 40% off its all-time high. So it starts to feed on itself, right? They rotate out from these like AI stocks that had its moment, and now they're kind of coming back to Bitcoin because it's been out of favor a lot, and that's really how markets work, right?
Okay, so talk to me a bit more about the Clarity Act, because obviously that was a huge driver of some of the renewed optimism this week, but I've heard varying opinions about what obviously regulatory clarity could actually mean for the space, if it will be like the rising tide that lifts all boats, or we'll see certain individual stories perhaps propel while others maybe lag. And so as far as just institutional participation from this increased regulation right now that's expected at least, how do you think through the Clarity Act?
Yeah, and so there was a lot of optimism about getting the Clarity Act signed before Congress went into the recess, but now it's been delayed. Hopefully they can get that across the finish line. But I think what we'll find this week is that the SEC came out with some new rules. The CFTC is working together to put out some more clear frameworks. And so we'll get regulatory clarity one way or another without the Clarity Act if it doesn't pass for some reason, when it comes back to vote. So I think that's the important part to take away here, is that the regulators are kind of changing how they approach this digital asset industry. They're creating clearer rules that help kind of foster innovation, help bring it back to the United States where you can build here and not have to worry about some kind of Wells notice coming at you just because you're building in this brand new asset class. And so I think we'll get regulatory clarity regardless, and hopefully they can get clarity over the finish line. But I think it's positive either way, and I think institutional investors will see this as a positive given the updates from the SEC and the CFTC over the last couple weeks.
Sam, last question I have for you. It seems like there's now new competition in this space where before, Bitcoin miners, they were building up compute, they were using electricity, it was getting more expensive because it was getting harder. But now those same resources are almost entirely being diverted towards AI data centers. How does that complicate the story in terms of bringing, more and more Bitcoin supply online?
Yeah, well, the Bitcoin network works in a certain way where the hash rate can go up and down, but they have something called a difficulty adjustment, which basically means that the miners who stay on the network become more profitable. And so there'll never be miners that don't find a use for running electricity to mine Bitcoin. What we'll see here is a shift of who's mining. In the past years, it's been large public companies, mainly denominated in the U.S., who have been mining, but now you're going to see that hash rate become more distributed. It's going to go to energy sources that perhaps AI data centers can't access, so really stranded, remote energy resources, which is actually a good thing for the health of the network long term, for the hash rate to be distributed across different energy sources, across jurisdictions. So there might be some churn here where some miners will turn off and go to AI, but in the long run, it's actually healthy for the network for it to be more distributed across the globe.
Okay, and I like that. A good place to leave it. A point of optimism, but really appreciate it and all of the insight today. Sam Callahan, of course, of Bitcoin Strategy at Orange BTC. Thank you so much for, of course, tuning in and really joining us today. But now coming up next, we will continue really our discussion that we're seeing here with all of right now the various, broader crypto and as well as just Bitcoin, zooming in a bit more on what we're seeing as far as overall strategy. And so, Alex, when you look at strategy, obviously making a pretty monstrous move today to the upside. We're up 7%, adding to its 29.3% gain this week. How do you think through this name?
Yeah, so this is a company that, when Bitcoin's struggling, really almost gets dunked on, right? It's like, of course, this is a company that's going to struggle. Their whole kind of basis at Saylor and team is to basically take on debt in this case, or dilute their equity in order to increase the amount of Bitcoin that's on their balance sheet. And so as Bitcoin recovers, and it's had its best week in several years, no surprise that a levered Bitcoin play, one of the most levered Bitcoin plays that you can find in public markets, is having an extraordinary week as well. This stock's up almost 30% in the last week. And so if you look at this name from a trading standpoint, It's going to be potentially more volatile, almost twice as volatile as Bitcoin is as an asset. But if you're believing in Bitcoin, it's perhaps something that can certainly perform quite well. So from an example standpoint, what I looked at here in this name, Jenny, is for the believers. You know, we talked about Bitcoin being an asset that feeds upon itself in terms of upside volatility. Well, MicroStrategy, are now known as Strategy, is that almost on steroids in terms of its volatility. So looking at this move to potentially continue into the next several weeks, and what I looked at was buying a essentially at the money but slightly out of the money call debit spread. It's the 125, 140 call debit spread. Now, the reason I chose 140 for the short strike is that's just below the 200-day moving average. Sam pointed out how Bitcoin had reclaimed its 200-day moving average. Well, Strategy hasn't. And so that could be a resistance point for this asset if it does move higher. And as structured here, the 125, 140 in September, if you spend $4 on this, your break even would be 129. So you need some help, but you can make upwards of $1,100, Jenny, if it gets above 140. So bullish strategy, no hiding from that, but risk defined in a really volatile space right now.
Yeah, and it definitely has been a volatile space, and it's been volatile, of course, still for Strategy, which is still lower by about 21% this year, but of course making a monster move this week while remaining off the highs by 67%. So we will leave it there for FOMO today, but coming up next, we'll discuss how one company is building a durable innovation pipeline rather than a one asset class in peptides. So stick around. Next Gen Investing will be right back.
She's got your smile.
Carl.
Yep, your #1 brokers here to welcome your new little dependent.
Actually, we invest with Schwab now. They have everything we need all in one place.
I can set up her college fund.
I've been learning about trading strategies.
And Schwab helps me generate retirement income.
All this Schwab is everything you need is making me cranky.
Does somebody need a nap?
Schwab!
Invest your way with Schwab.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network.
Welcome back to Next Gen Investing. Now, Protagonist Therapeutics is a clinical stage pharmaceutical company.
Do you think there's any conflict of interest with you being the AG's wife here?
You're doing such a good job, you're making their life miserable, and they're trying to figure out a way to stop you.
So to help us dive deeper into this groundbreaking peptide technology, today we are joined by the Protagonist Therapeutics CEO, Dinesh Patel. Dinesh, thank you so much for joining the show today. Now, let's start off with just a brief overview of really what your company does and, of course, how you're staying very competitive in what is a very cutthroat right now biopharma market, but peptides are everything in the moment right now.
Well, first of all, thanks for having me on the show and giving me the opportunity to represent Protagonist Therapeutics. It's such a pleasure. And yeah, I mean, we started this journey all the way back in 2008, and believe me, at that time, people barely knew about peptides. But that was, it gave us the time and space to work silently when nobody was watching us. And what we have created is ability to create peptidic drugs against almost any disease or any indication. And we go after those situations where our peptides can offer a huge point of differentiation. To give you an example, like in the inflammation and immunology space, right? I mean, these are diseases like psoriasis, psoriatic arthritis, inflammatory bowel diseases like Crohn's disease, ulcerative colitis, asthma, atopic dermatitis, eczema, you name it. And the core component is this field is entirely dominated by blockbuster injectable antibody drugs. And we thought in our scientific minds that somehow if we can come up with peptides and make them orally stable and orally bioavailable so that now one could have the medicine in the form of the convenience of a pill, then that would be revolutionary. And that is what we have been chasing for more than a decade in a big way. And our first example over there is Icotide, the first and only oral IL-23 blocker that has been partnered with J&J. It got approved a few months ago on St. Patrick's Day. I will really encourage everybody to watch the very catchy commercial. It has the unicorn element in it, and the slogan is "It's unbelievable," and it's truly unbelievable. The drug has taken off like hot candies or cupcakes, if you will. So that's the power of the oral peptides. And now with the advent of peptides in the obesity space, as you know, the two major peptides are now are injectable peptides, but now Wegovy is also available as an oral peptide. And the massive shift towards oral peptides, oral Wegovy, is a clear indication of what is it that the patients would prefer, especially for this kind of chronic indications. So these are the kind of areas where we are trying to make a differentiation and trying to address huge unmet medical needs and offer convenience to patients in those diseases that are especially chronic in nature, meaning, unfortunately, the patients have to take medications the rest of their lives.
Dinesh, first off, we thank you for joining us, and congratulations to you and the team at Protagonist for all the successes that you guys are experiencing, as this has been an area you've, of course, been almost a trailblazer in, as you say, kind of looking at the peptide space, well before it was sort of in the zeitgeist. But as someone who's been working on these products and researching and trying to make these breakthroughs, what do you see as the biggest hurdle right now to what you believe it can be versus where we are right now?
Yeah, I think the biggest hurdle over there is clearly, with peptides, what you're trying to do is, with a chemical entity that is almost 100 times smaller in size compared to the big antibody drugs, you are trying to package in so many characteristics. You want the potency and specificity and efficacy of a big antibody drug, even though your chemical entity is 100 times smaller in size. And now at the same time, while antibodies are injectables, in your peptide, you want the additional feature of like, oh, this has to be orally stable. It has to survive the gastric enzymes and juices in the GI tract of a human being. And then it has to be absorbed to go into the bloodstream and be distributed into the body, right? So in that regard, you want the characteristics of oral small molecules. So essentially, you want the best of both worlds. And that is where it becomes very challenging. And that is where our advantage comes in, meaning we have been secretly, silently, and in an unnoticed fashion, we're working on it all the way back since 2008. So it's kind of like a secret sauce that we know that we have, and we intend to apply it in a repeated fashion to many different kind of future targets in the field of immunology and inflammation, in obesity, in hematological or blood disorders, and many different areas.
Okay, yeah, and I think it's in such an interesting space to watch and just follow along. And so really beyond just this upcoming FDA catalyst, of course, what else are you most excited about in, say, the coming next few months for your company?
Yeah, so, Icotide got approved in March on St. Patrick's Day, to be precise. As you know, we also have another drug, rusfertide. It's a mimetic of the natural hormone hepcidin in our body. And hepcidin's function is to control everything about iron, the storage, absorption, distribution of iron in the body. So you can imagine an imbalance in hepcidin can lead to iron-related diseases. So one such rare disease or a rare form of blood cancer is polycythemia vera. And it is a disease where the patients unfortunately produce excessive red blood cells. We refer to it technically as erythrocytosis, but commonly, as you can imagine, referred to as a thick blood disease. And so far, there has been no erythrocytosis specific or red blood cell synthesis specific medicine out there. Fortunately, we are closer to the finish line. We hope we have had a very successful phase 3 study more than a year ago, on the basis of which an NDA filing has been done. We also have a partnership with Takeda Pharmaceuticals over there. And the PDUFA date, meaning the day when the FDA provides the verdict, that is just around the corner by the end of this month. That is the anticipated PDUFA date. So time will tell. But that is the next big event. And let's assume for a minute that if the outcome is positive, then we are really going to be on cloud 9, as you can imagine, because this year alone, then we would have not one, but 2 drugs that will have crossed the finish line, so to speak. And, just to kind of give you some numbers, on an average in a typical year, the agency would approve, let's say, about 40 to 50 drugs in total from the entire pharmaceutical sector, right? As of today, I believe the agency this year approved about 33 agents. So we have contributed 1 drug over there, Icotide. If we are lucky enough to contribute the second drug also, we'll find out in the coming weeks, then that will be really amazing for us. Now, of course, this is the outcome of accumulation of decades of work. And we believe that we have this nice setup, nice know-how, nice expertise in the field of peptide therapeutics that could be applied continuously to many other biological pathways to create new oral medicine and address unmet need in many other disease indications. As an example, we recently announced that we had an outstanding phase 1 result with our oral IL-17. We refer to it as PN-881. Now, this is an area where the blockbuster antibody drug is Bimzelx. It is approved for psoriasis, psoriatic arthritis, HS, and spondyloarthritis. And again, if we succeed, we will be kind of like the first oral medicine in that particular category. Going beyond that, we are also working on another immunology target, IO4, and the poster child antibody drug over there is Dupixent. It's approved for asthma. It is approved for eczema, those kind of things. So as you can imagine, we continue to kind of go for repeat performance and create our unique presence and try to revolutionize the whole space of inflammation and immunology with this kind of oral medicine, which has not existed so far. And again, we are not confined to this disease area. As you mentioned, obesity, right? I mean, that is dominated by injectable peptides. We are creating very unique oral peptides over there. The latest thing in the field of obesity is the triple G or the triple agonist from Eli Lilly called retatrutide. Now, obviously, it's an injectable, but it has had outstanding phase 3 data. It is probably the most weight loss effective drug that is out there. We are developing an oral triple G peptide of our own. right? So that will be, I would say, very game-changing, both for protagonists and for the patients, I believe. And then we will continue our march in the rare disease area as well. Rusfertide that I am referring to, the drug that we have partnered with Takeda and that for which we are awaiting approval, that's a once-weekly injectable. We are coming up with an oral hepcidin functional mimetic as well. It's early days, it's preclinical. Next year we will go into the clinic. So I can go on and on, but you can the sky is the limit over here. If you combine all this areas that we get into, we believe we are addressing a market which in total is over 100 billion in market size.
Well, we really appreciate it, and really great summary of what we're seeing, of course, from a fascinating space. So appreciate your time today, Dinesh Patel, Protagonist Therapeutics CEO. Now to shift gears, though, into a mover today. Broadcom is in talks with lenders to raise over $60 billion in debt for AI semiconductor finances. But the bigger question is whether this points to massive AI infrastructure demand or a more complicated financing backdrop. So for more details, we're now joined by Sam Vadas, host for the Schwab Network. So Sam, walk us through what stood out here and, of course, all the movement of Broadcom this week.
Yeah, well, the first thing I thought of was, look, another day, another debt package here, because it's not the first we've heard of, Jenny. But, you know, interesting move. It was initially reported by Bloomberg. You've got a couple of other media outlets that are now obviously discussing this. But there have been parts that have been confirmed, others that haven't just yet. So we'll have to wait and see how this plays out. But you're right. I mean, it just adds to this flurry of deals that we've seen as far as backing this enormous AI infrastructure build out here. So the details as far as Bloomberg is concerned is that Broadcom is in talks with a bunch of lenders to raise more than $60 billion that is in debt for an AI chip financing deal that will benefit Anthropic and some other companies. Now, this is still being ironed out as far as the financing is concerned, but they're saying it could include roughly $30 billion in junior debt. And so that would then basically bring the total to as much as $100 billion with this senior debt tranche and the junior debt tranche. The potential deal would help firms including Anthropic access the chips and other key AI infrastructure. Now, the Bloomberg numbers are slightly higher than what CNBC is now reporting at around $80 billion. So it doesn't feel that straightforward at this stage. Broadcom, essentially, what we know from these reports, essentially wants to backstop the senior debt. But the structure seems to be a bit complicated. Basically, what the reports are getting at is that the money is going to be raised by a special purpose vehicle, SPP, which will purchase the chips and then sell them back, or lease them at least, to the customer. Broadcom doesn't lend the money exactly, but it is still accountable if the customer cannot pay the money back. The report says Blackstone and Apollo will be in talks to take part in the chip financing. That's the junior piece of the story, but that comes after a deal that the three companies struck back in June, what they had called at the time Capital Solution. Couple of interesting threads that obviously merit pulling on in this story, and that the reports really point to, is that basically the industry, as we know, guys, is coming up with very creative ways right now to try to fund this entire AI build out, which we know is very expensive. The challenge also here is to NVIDIA in this lucrative market as Broadcom sells more chips. It's interesting, obviously, because NVIDIA announced this deal with the Wall Street firms about the $500 billion for this build-out, but this has really been described as an extension of that. But these shares are up today off the back of this announcement and this report, come off the highs now, but certainly something to watch, as, you know, this is really where things are heading right now as a lot of these tech companies tap the debt market.
Yeah, I mean, it's not the first company, it's just one of several now, and so good point there. Really appreciate it, Sam Vadas, for all of that breakdown. Of course, Broadcom is slightly higher, at least today. But coming